Sorry about that. Missed the opening bell. This is Microsoft. Microsoft on the move. All right, Microsoft looks good. Let me see. How much Microsoft do I have left? Okay, S&P continuation, pushing a bit higher. Microsoft trying to move above the pre-market high here. Microsoft trying to move above its pre-market high. Okay, we're pushing through the pre-market high right now. We're looking for a closing candle on above average volume. Looks pretty good here so far. Palantir, what are you doing, Palantir? All right, moving a bit lower, bouncing off of the 21-day Palantir. SpaceX, what are you doing, SpaceX? Okay, Cerebras has earnings coming up. Cerebras, looking for a follow through. Cerebras was looking pretty good, trying to push through these levels. Okay, Cerebras. Okay, Intel offering new shares. Okay, I'm looking at the wrong chart here. All right, AMD bouncing. I'm going to put Palantir over here where AMD is. PLTR. Palantir. PLTR. Palantir. It looks a lot better. Palantir is up this morning. Okay, so disregard what I just said. Palantir is above the 200-day. Let's see, Palantir. Microsoft's still going here. Microsoft still on the move. Palantir is up. Okay, we're above the pre-market high, I believe. Pre-market high is right there. We close above, so this is probably going to go. Palantir probably goes here. Okay, thank you, dollar. SpaceX, nice volume already on SpaceX. S&P looking for a follow through on a bounce. Hertz following through. Hertz following through. Mondo. Okay, Hertz looking good. HTZ. Hertz above its pre-market highs. Starting to go now. Okay, we bought back in. We took profits. Somebody mentioned Hertz prior to earnings. We held on to the 250s. I have the $2 strike now. And that is what expiration? That is September. I have a $2 call for September on Hertz. Okay, let's see what is actually moving the most. All right, we got Diamondback Energy. Okay, energy stocks did fade a little bit last week, and now they're back up. So we needed energy to push higher. We need financials higher. Okay, those look good. Make sure you check out your favorite big bank stock. My favorite is JP Morgan. JP Morgan and Wells Fargo. Citigroup, looking for Citigroup to get above the 50-day and start trending. RSI is rising. Morgan Stanley on the watch list, along with JP Morgan and Bank of America. Bank of America trending. What do you need, dear? What do you need? Okay, let's see. It's early. Where is my clock? Where is my desktop clock? It's missing. Desktop clock. There we go. All right, it's 9:36. Got to have my desktop clock. Hope everyone had a good weekend. Got a question for you guys while we're waiting for this pre-market opening range period. My son wants to go visit his sister up at Duke. It's like 3 hours, 3.5 hours away. He wants to go by himself. I said no. I feel like I'm being a hard ass, but 3.5 hours by yourself in a car at 16, I don't think that's a wise idea. No problem with the car. Car's new. I feel like I'm being a hard ass though. Anyway, SpaceX looking pretty good. Let's take a look at that. SpaceX, some nice volume this morning. SpaceX looks like it's finally going to start going. Hertz, cheap stock. Okay, bullish engulfing candle, Hertz. That's what they were selling. Yeah, Money Magic, they were doing that 2 weeks ago as well into last week, selling U.S. Treasuries. That forces the bond market and yields higher. The yields higher, the 10-year yield. So we're still having issues there. All right, so it's not too bad. Junk bonds, just starting off the day. S&P is still sitting here. Junk bonds. Okay, junk is still sitting here at the 50-day. High yield corporate has been performing much better. It's above the 50-day, new highs for the year so far. S&P is starting to fade a bit. S&P is starting to fade. I don't think I have any options on S&P. Actually, I do. S&P. S&P. I got today's calls. I bought those Friday. Looking for S&P to get back up to 77.60, 77.70 zone. Okay. XLF. Take-Two, Diamondback Energy, Fortinet, Baker Hughes. Those are the top stocks on the NASDAQ 100. Energy turning back up. Watching the S&P. Amazon turning back up. Amazon, we needed Amazon to participate. Microsoft. We also needed Meta and Google to participate. Last week we had New York FANG up as we presented in the weekend video. All right, so we're sitting up here against a double top. Feels like it's going to pop. RSI is still rising. New York FANG index. Okay. Last week we didn't have very good performance out of Amazon or Google. Google is still moving lower. So those of you who have Google options, those are fading. Microsoft looks a little better. That's helping. Apple pulling back. Netflix is pushing a bit higher. Let's look at Netflix. Okay, pre-market high. Netflix Palantir is above its pre-market high. That's bullish for day trades. That could just be shorts covering. That we're looking for a dip this morning. Palantir still looks good. Oracle's a little higher, but it faded from the high of the day. Oracle. Okay, we're looking for candidates to day trade and to swing trade. Yeah, money. Always caution if you see something that we're not paying attention to. Mic check, mic check. Okay, Snowflake on the watch list, the extended watch list, looking for a follow through. Snowflake following through. Follow through day. Microsoft looks like it might want to go. Google's still fading. Okay, we continue to move higher. Snowflake is looking really strong above the pre-market high. You can see how this setup works. Once you're above the pre-market high, you look for a close and above average volume. This is probably going to keep going throughout the day. It has earnings, what is a week out? In September. So we got some time for this to continue to work. I wouldn't buy it right this minute. I would have bought it 3 candles ago. I didn't catch it fast enough, but Snowflake looks good. Snowflake. Okay, let me just do this. Hmm. All right, watching Microsoft. CBRS has earnings on deck, looking really good here. CBRS is breaking out to new highs, taking out last week's highs. All right, CBRS a little selling right there. We've got Microsoft following through. All right, S&P is just sitting here, just watching hedge flows. Let me just copy this. All right, S&P is trying to rally. Okay, you're looking at Coinbase. Okay, Coinbase. Oh, CONL. CONL. I have shares as well. It's basing. Okay, S&P is starting to rise. Microsoft's still pushing here. Microsoft. Cerebra's trying to find its footing. Microsoft. All right, it's 10 o'clock. Opening range highs are what we're looking for. Here's Microsoft. Here's your opening range high right there, just overhead. Opening range high right there. Okay, ARCX. Okay, big move there. Pre-market high, just overhead. Okay, Dow Jones. IBM is on the watch list. That's following through. IBM is looking good. It's moving above the high that we saw on Wednesday. Okay, I'm going to buy some IBM here. Let me just check one thing. IBM. Okay, earnings whispers. October 21st. Okay, not the best in terms of revenue and earnings, but chart looks good. Chart looks good. IBM, we're above that Wednesday high, that doji. Bollinger Bands are tightening up, so this could stay in this range right here. I might wait a little bit longer. Looks good though. All right, sorry, I'm a little distracted at the moment. Okay, a Broadcom, looking for that to continue. Got a small position in Broadcom. It's just grinding higher. Broadcom. Okay, ABGO. Okay, it's after 10. We're looking for stocks to continue. Datadog, opening range breakout, Datadog. Okay, off the lows here, Datadog. See, that was one we looked at. Oh, no, it was the other one. It was Trade Desk, right? TTD. Trade Desk, no follow through. Inside day. Trade Desk, Datadog. Looking good. Datadog wants to get back above the 50-day. Let's see what earnings look like. Datadog. Reported last week. Datadog reported last week. 155, almost 156%. Earnings growth, 35.6. Revenue growth, they beat by 83%. Whew, that's a big beat there. 50 cents. They beat by 50 cents. Almost double what the consensus estimate was. Datadog. Okay, so Datadog looking pretty good here. Don't want to buy it here, but we'll be watching for it to get above the 50-day, much like Broadcom proved. Okay, CrowdStrike breaking out, also watch list. CrowdStrike looks good. Security, Datadog, CrowdStrike. What does Palo Alto look like? PANW, Palo Alto, also breaking out. Zscaler. Security stocks are all breaking out. Okay, Microsoft's still going. Microsoft's gone. Amazon. Amazon's also looking good, breaking higher. Okay, it's above the opening range high. It might go here. Oh, might go here. What were earnings? Earnings, big beat on the earnings, right? Let's see, Amazon. Amazon looks like it wants to run. Amazon. Earnings growth. I mean, I buy stuff on Amazon. It's here the same day. It's crazy. Don't know how they do it. All right, S&P continues to make highs. Okay, S&P, I got the options that I bought on Friday for Monday expiration. So this is looking pretty good. All right, so let me just check these out. S&P. Okay, we're up on S&P. I got the 77.60s. I also have 77.70s, 77.75s. All right. Okay, this is looking really good. All right, S&P pulling back in a little bit. All right, let's see what hedge flows look like. Hedge flows are trying to turn up. 0-day. Okay, let me see. Let's see. All right, this has been growing 77.60. Notice 77.60 at around 945, 950. It started to grow 77.60. Watch this change from negative gamma to positive gamma as we push through it. Wow, that's impressive. Futures looking pretty bullish. Okay, Microsoft's still going. Nvidia in the toilet. Netflix is going as well. Netflix is moving. Okay, so Netflix looks like it wants to take out the 50-day. Okay, let's look at what's going on here. Let's zoom out. $77.85, $77.95. We got some negative gamma, 98%. 99% is 77.65. We just hit that level, moving above S&P. Palantir, still pushing, Palantir. Good January calls for Palantir 200. Okay, looking good. Palantir is looking really good here. S&P looks like it wants to go, S&P. S&P looking for a bounce. Weighted is still very positive. Riot. What's Rocket Labs doing? Rocket Labs. Rocket Labs has earnings. Rocket Labs, RKLB. Rocket Labs has earnings after the close today. Okay, S&P is climbing. S&P climbing on that little dip. Netflix still going. Microsoft is looking strong. Tesla going now. Tesla now. Microsoft follow through. All right, Fastly. You looking at Fastly there, Tony? Okay, S&P, big move here. Nice little pop to the upside, S&P. Okay, Microsoft's still pushing. Apple's starting to see some short covering. Amazon's up. Netflix is up. Palantir at the high of the day. Palantir. S&P pulling back in a little bit. Palantir. Very strong move on Palantir. Palantir still moving here. Palantir. Okay, Palantir, I got January calls, right? Yeah, January. Got the 180s. Also has some 200, 210s that I've had for a while. What's Google doing? I'd like to get back into Google. Haven't been in this one for over a week or so. Actually, you know what? I still have Google, don't I? I still have a small residual position. I was taking some things off. Yeah, Google's still, I still red on Google. I have August 21st calls. They're underwater by about $100 each. All right, so like to see Google rally here. Amazon looking better. I don't know how they do it. Amazon, how they're able to deliver. I guess you have to be close to a warehouse. Most locations that are near airports, I think, probably have an Amazon warehouse nearby. That company's come a long way. Okay, looks good. Palantir, excellent, excellent. Up again today, Palantir. Okay, Palantir still moving. Okay, let's see, Palantir. All right, S&P turning back up. Weighted signal is very bullish. Most sectors are green. Palantir. Palantir. Looking good, Palantir. Tesla pulling back in. All right, so there's a little fake, little pop there. Microsoft seeing a little bit of profit taking on that run up. Microsoft has been acting a lot different than it has in the past. If you've been around watching Microsoft for any length of time, we got opening range breakouts. It is extending its highs now. Good, good. Microsoft looking good. Palantir, software as a service. That looks good. All right, Cerebras. What's Cerebras doing? Fastly looks good. Fastly. 60-minute. Big move on the 60-minute 20 EMA. Fastly. Microsoft. Amazon looks good. Let me look at Amazon again. Amazon. AWS. Amazon. At the highs of the day, Amazon. Opening range breakout, looking good. Hedge flows trying to turn up more. Higher low. Okay. Trying to break out of this range. It looks like we're starting to stall a bit. Let's see what up down volume. Up down volume is mixed. It's 1-to-1. It's 1-to-1, so We're looking for, okay, New York Fang is breaking out. So what stocks are leading? Netflix, Amazon, probably keeps going. Snowflake turn, a little dip. Snowflake, a little dip. Okay, pre-market high, Snowflake. Broadcom, just trending. There goes Meta. Meta's starting to go. We were looking for Meta, Amazon, and Google to keep going. Okay, I need to get through the pre-market high. Here's Meta. Meta's above the 50-day. Meta's above the 50-day. Let's see what Meta looks like. All right, so it's pretty expensive. Meta. Let's see. Let me get rid of the banks. Do I have the banks on here? Meta. Risk reversal 96. Okay, S&P is trying to break out. I was thinking about buying some call spreads on Meta, but it's got a pretty high risk reversal rank. Let's see what Netflix looks like, actually. Netflix is good. Okay, Meta does look good. Got an opening range breakout on Meta. Maybe a day trade. It's above the 50-day. Could follow through. FBL. Netflix is pushing. Netflix. Meta looks really good here. Netflix. Netflix looks good. Opening range. Above the opening range. No above average volume, but it looks like it's trying to get through the 50-day. The software and security stocks all look good. Datadog, Palo Alto, Zscaler finally starting to trend. Zscaler. You said Datadog, right? Datadog. Number 2, Palantir continuation. Palantir looks really strong. Palantir. Palantir. Okay, that's a nice breakout, Palantir. Palantir, nice breakout. Okay, volume looks good. Palantir. And we got breakout in the New York Fang. Palantir looks good, right? Palantir, probably going to add to Palantir. Okay, that looks good. 190 is coming up. 198. Okay, Palantir. Back above its 10 EMA weekly. Looks good. Palantir. Okay, let's look at the 60 minute. 60 minute looks good. Okay, 60 minutes trending. Palantir. No reason to do anything. Just let it go. Palantir. Strategy, MSTR. Okay. It's in a big range. Big range. Get back to MSFU you're looking at? MSTU. Okay, MSTU. 202, 202, 209, 215. 220, 221, 226. Yeah, it's been a big range. 226, 230. Okay, Meta looking for a follow through. Palantir, a little profit taking, but still going here. Palantir. Netflix. What do I want to do with Netflix? Netflix. Palantir looks good. Oracle trying to break higher. Oracle's about to break out. Okay, Oracle about to go. 50-day. 50 days of target. 159. 159. Oracle looking good. About to break out here. Oracle about to break out. Oracle's about to break out right here, right now. Note the daily. Okay, Palantir looks very similar. Palantir breaking above a level on Friday, following through today. Palantir. Palantir. All right, Cerebras, what are you doing? Cerebras, CBRS. Got earnings this week. on Wednesday, we've got, what's it, Rocket Labs tonight, RKLB, got earnings tonight. Okay, S&P pulling back a little bit. Okay, up-down volume is 1-to-1, mixed, some up, some down. 1-to-1 up on the New York Stock Exchange, 1-to-1 down on the NASDAQ Composite, 1-to-1 up on the SPY and the Qs, 1.35 on the Qs, 1.35 on a Diamonds down, and 1-to-1 down on IWM. So it's a mixed bag right now. Let's take a look at the New York Stock Exchange. New York Stock Exchange. Okay, about to make another new high. New York Stock Exchange. And New York FANG. Trying to break out, New York FANG. Okay, S&P 500. Okay, just grinding along. IWM, small caps most likely being impacted by the higher yield. And the Qs inside day doji. All right, S&P pulling back a little bit right now. Broadcom pulling back, Meta pulling back. Okay, it's not quite 11 o'clock on the East Coast. I'm your host, Cousin Benny, coming to you from theclosingprint.com. It is Monday, August the 10th. Okay, Palantir, profit taking on Palantir if you're day trading it. Okay, looking for dips to buy. Looking for dips to buy. We've got Riot lower. Let's see, BRTX. BRTX. CrowdStrike, Datadog, Palo Alto. All of those the top of the list here. All these security stocks. Okay, let's take a look at these again. Datadog, Palantir, Palo Alto. Palo Alto is breaking out the new all-time highs. CrowdStrike already did. CrowdStrike. So CrowdStrike, I'm looking for the entries near the 20 EMA on the 60-minute. Not up here. Look for this to pull back. Palantir, same thing. Pulling away from the 10 and the 20 EMA. Don't buy it way up here. Wait for it to pull back a little bit. Okay, CrowdStrike, we just said, right? Yeah, CrowdStrike, Zscaler. Okay, these are all pulling away from. Okay, so Datadog is probably one of the better ones. It's also in cloud security, moving above the 20 EMA. This is probably going to keep going. Let's see what the daily, that 5-minute looks like. Okay, Datadog looks good. Do I want to do anything with Datadog? Datadog, I'd like to buy some Datadog. Now transitioning above the 20 and 10 EMA on the 60-minute. Let's see. When are their earnings, Datadog? Oh, they already reported, right? Okay, they already reported. Datadog beat 156% earnings growth. Datadog. Data dog. Looking for this to continue. Data dog. Let's see. Data dog. All right, looks good. Data dog. All right, just taking a little profits off Palantir. From earnings last week, Palantir, Netflix. Netflix, looking for more upside on Netflix. We're at 70, just shy of 75. There we go, 75. Getting Datadog, watch Datadog here. Okay, the thing about Datadog that I like is that it's following in the footsteps of Palo Alto, CrowdStrike, which is breaking out. Both of those breaking out. We got Zscaler also trending. We got Datadog, looks good. Look at this 60-minute. It's just now transitioning above the 20 EMA. So earnings suggest we could see more upside. So once it gets above the 50-day, I like it a lot more. Let's see, markets are... Datadog, DDOG. Datadog. Looking for more upside, Datadog. Palo Alto. Look for Datadog to continue. Datadog, opening range breakout. Zscaler. Okay, looking for Datadog to continue. It's number 2 on the NASDAQ 100, number 2 on the S&P 500 as well. Security stocks look good. Oh boy, hope everyone's having a good day. We're just after 11 o'clock on the East Coast. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Monday, August the 10th. Just shy of lunchtime, about an hour away. All right, watching the S&P for a dip. Hedge flows continue to point lower, so watching this level right here. Looks good. Okay, looks good. S&P is trying to bounce some more. Amazon is still going here. Amazon. Palantir is still fading. Okay, looking for a dip to buy. Palantir looking for this dip to buy. All right, looks good. GDX. 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 Okay, Netflix looking good. Still going here. Netflix looking good. All right, Datadog looks good. Okay, the thing I like the most about Datadog is the 60 minute. All right, we're right at the 50 days, so this could get rejected. The fact that all of these are the top of the list speaks well for security. Datadog. All right. Let's see. Amazon looks like it wants to keep going. Intel looks like it's turning the corner now. Okay, watching the S&P, looking for a bounce. Datadog trying to take out the high. It's right up against the 50 days. So a lot of people are going to sell just because they've been told that first rejection usually at the 50 day. We didn't really have that on the S&P, right? The S&P closed above the 50 day. We kind of consolidated below, but we popped above the 50 day twice since July. We popped above in late June. We failed again, came back down, bounced again, jumped through the 50 day. That closed above the 50 day. There was no rejection, just this consolidation, and now the follow through. So this is looking pretty good this is looking pretty good. And if you look at the New York Stock Exchange, there's no reason to believe we can't continue. Look at the New York Stock Exchange, NYSE, composite, trending. All right, we should have, I think we have we should have Brent on today, right? Let me see. Let me see here. Okay. Okay. Do we not have a seminar today? Maybe later.
WYHG may rise in 10 seconds.
Okay, looking for a bounce. S&P looking for a bounce. Netflix, Datadog. Okay, breaking out. Datadog is trying to close above the 50-day.
NET. OPX may resume in less than a minute. TNON may resume in less than a minute. SCKT vaulted down. WYHG. BCLA may resume in less than a minute. BCARU may resume in less than a minute. VIBK. WYHG vaulted to the upside. WYHG. OPX may rise in 10 seconds. TNON may rise in 10 seconds. VIBK. BCLA may rise in 10 seconds. BCARU may rise in 10 seconds.
Okay, Palo Alto looks like a little profit taking there and some buyers stepping up. Intel looks like a decent pullback. Did I sell Intel last week? Look, if I did, I'd be looking to get back in Intel. Yeah, there's some dilution. Apparently I saw somebody mention an offering or whatever. Okay, I don't have no, I don't have any Intel at the moment. Let's take a look at Intel. Intel. Okay, we're just moving above the VWAP. Okay, pre-market high is way up there. So you might have a mean reversion trade here on that. I said long September 100, 105s. I don't have those anymore. I don't have those anymore. All right, so these stocks are working. Zscaler, Palo Alto, CrowdStrike. I like CrowdStrike the best. Breaking out over there on the daily. Bollinger Band's opening up. CrowdStrike probably gets the most attention. And then next to that, Palo Alto, or vice versa. Vice versa. Amazon breaking high. Did I buy Amazon? Did not. I did not buy Amazon. Unfortunately, that's okay. Starting off the week strong. We got Amazon with opening range breakouts. Looks good.
ATH. CLR. ECLR. STKH. CLR. ECLR.
Barfly, BFLY, BFLY. Ooh, that looks good. Looks good. Butterfly Networks. Let's see. BFly, BFLY, BFly. At this point, I'd probably be interested in selling some premium. First handheld single probe whole body ultrasound system using semiconductor technology. Single probe whole body ultrasound. Interesting. Butterfly. Good numbers. Small cap. The report again in October. Butterfly. I like it, Frano.
ECLR. SCKT.
SSBC, SBCG, SBCQ, SWYHG may result in FDs.
LCMH. SCKT.
WYHG also to the upside.
SCKT.
SSPC, SPCG, SPCQ,
XHLD, CLRO, CLRO,
RKLZ, MSTZ,
CLRO, JWB out,
Okay, looks good. Amazon, Datadog. Okay, a little bit of profit taking looks like on Datadog. We're right at the 50-day moving average, so I'm not surprised to see a little bit of
D,
consternation. People are trying to decide what they want to do. If institutions like it as much as they like CrowdStrike, Palo Alto, and Zscaler, then this is probably going to jump above the 50-day and be a good gap fill over the next week or two.
JWB out,
Datadog.
DCLA,
All right, so it looks like we've gone into a sideways chop. Okay, looks like we're going into sideways chop right along this level at 77.60. A move above 77.60, there's not a whole lot overhead to slow things down.
HYFM,
Okay.
DCLA,
Amazon's still going. Amazon's still going.
CKT vaulted down,
Amazon looking pretty good. It's at the high of the day. Can't buy it up here. Okay, what else? Let me go through this list of stocks that are looking really good.
XHLD,
VRTX, gapping up. Datadog, CrowdStrike, Palo Alto. Those are the top four. Diamondback Energy is number 5. Diamondback Energy.
ATH,
Above the 50-day. This looks good. Diamondback Energy. Baker Hughes, BKR. All right, that's trending. Baker Hughes.
XHLD,
This could be up a week and down the next week, just based on what's going on with the Iran conflict. Palo Alto, Palantir is hanging out. Palantir is hanging out right here. Dexcom, DXCM, Dexcom, trying to break higher. This is one on the watch list too. Dexcom from the watch list.
XHLD,
That looks good. Dexcom. What's Allegheny Technologies look like? ATI, precious metals and alloys for use in military applications. Apple, no follow through, so that one's dogging out. Credo is another one we looked at from the watch list. Looking for that to break higher. Credo, CrowdStrike, you already know what I think about CrowdStrike. That's breaking out. Watch list. Dell, looking for that to bounce and break out eventually. It's been in this sideways base for the last almost 3 months now. Dexcom, we just talked about. IBM, I really like IBM. Okay, it just hit the Bollinger Bands. Probably stays in this range for a little while. You see this pocket right here. So once it gets above the 50 and the 200 day, you're giving up about 30, 40 points. But once it gets above the 50 and the 200 day, should be good. I would think that probably pulls back up here to the 50 day at a minimum. There's like blue sky in this area right here. Runs into 245, 250. It'll probably slow down a little bit. IBM on the watch list. Internet of Things. I was reading about this one over the weekend. Very interesting. Companies buy these devices from IoT, Samsara. It's tied to a database, so you can have these plugged into your vehicles. Like if you have a fleet of vehicles like Mondo has, it monitors the engines, it monitors the electronics, it monitors everything, so you can catch things that can go wrong with a vehicle, or an employee driving where they shouldn't be, or whatever. You can track it on this dashboard that Samsara has. You pay a subscription per vehicle, per installation. It's very interesting. IoT.
STKH.
Very interesting. Trending. JD.com, that has earnings this week. It looks like it wants to break out. JD.com, Chinese stock. JP Morgan, we talked about. Trending. The banks are trending. MDT, Medtronic. That's about to clear the 200 day. This one's probably going to keep going. MDT. Meta, we're looking for a break higher. It is sitting on top of the 50 day. Morgan Stanley, banks, Microsoft, software. A little dip here getting bought on Microsoft. NVIDIA, no follow through on NVIDIA. Had a nice bounce last week. Upper Bollinger Bands, probably going to consolidate in the upper half of the Bollinger Bands, so you don't need to do anything right now with NVIDIA. Rocket Labs has earnings tonight. That pulled back. Rocket Labs, I'm going to buy some puts. I already have calls. I have the 95, 100 call spread, I think. Let me see here. What do I have? Maybe I should buy some puts. I don't want to buy it right here. I want to buy some puts. So I'll have basically a long iron condor. I think they're going to beat. Rocket Labs is probably going to beat. I got October 100, 105s. Okay, so I'm a little bit higher here. So if we get good earnings and above the 50 day, that'll be good for my Rocket Lab long call spread. Amazon starting to pull back. So we're looking for B and C pivots now.
MTEN.
Looking for B and C pivots.
SCKT. JWEL.
WYHG may res in 10 seconds.
MTEN.
WYHG vaulted to the upside.
MTEN.
Okay. S&P continues to fade now. Amazon pulling back from the highs.
DTSS.
Okay. Oracle just off the high of the day. So we're looking for stocks that have already made the low of the day. If the S&P can bounce here, watch stocks like Intel, look for a turn back up. Let me just take a look at Intel here. Intel. Okay, Intel. $15 billion common stock offering. 15 billion, wow.
ATSS.
Okay, probably should wait on Intel and see how it deals with this. I don't have these anymore. I sold those on Friday. I'll be looking at those again though. Looking at 100, 105s. They're probably pretty cheap, right? For September, Intel. I don't want to put any money on Intel right now. They have an offering, a $15 billion offering. That's a lot.
CAT.
Mm.
STKH.
TTSS. MSTZ.
DTSS. And CKT.
It's about a 3% share per share dilution. All right, there's another option 30 days from now. They could exercise another 2.25 billion.
STKH.
Total dilution roughly 3.5%.
DTSS.
DTSS.
Okay, Intel is funneling the money back into CapEx, expanding its fabs, 18A and 14A manufacturing processes to build chips for customers like Tesla. Okay, this actually looks okay.
TSS. And CKT.
All right, still paying attention. Okay, Datadog is number 1 on the NASDAQ 100 right now. Datadog. We'll come back to Intel at some point.
DTSS.
Okay.
HG may resume in less than a minute.
Intel.
XHLT. DTSS.
WYHG may res in 10 seconds.
XHLT.
Datadog still pushing. Snowflake turning back up. Looks like Amazon wants to go again. Microsoft's trying to hold this level. I suspect that Microsoft's going to be a grind higher.
CLRO.
Okay, so
WYHG vaulted down.
Rocket Labs, starting to see a little bounce in Rocket Labs.
XHLT.
Okay, if it gets back, if Rocket Labs gets back up here to like 83, I'm going to buy some puts just for protection. I have the 100-105 call spread for October.
STKH. TT and
I'll buy, let's see, do they offer weeklies or just
CLR.
Rocket Labs? Let's see, RKLB. RKLB. Nah, I don't want to buy 14. All right, so 14. So Friday puts are
TSS.
going to buy the 80-75 spread for about $2. You can buy 5 of those. I have 10 of these call spreads for Rocket Labs. For earnings tonight, I was hoping to exercise or take these off. I was hoping to take these off above the 50-day. We didn't get there. Earnings prospects for Rocket Labs are pretty decent.
STKH. TTSS.
Okay, Rocket Labs. The consensus revenue is 231 million,
SCKT.
squarely in the middle of management's previously issued guidance range of 225 to 240. So their consensus is 231 million. EPS estimate, Zacks has 3 cents, a loss of 3 cents to 6 cents. If we come in with a profit, that would be nice. I don't think we will. I think we'll probably still see a loss. Rocket Lab's last quarter handily beat expectations, posting I believe a $200 million in revenue and a narrower than expected loss, which sent the stock up 34% in a single session.
TTSS.
Interesting.
SCKT.
RCAT.
Rocket Labs tonight. I already have a call spread, so I'm going to buy some puts if we can manage to get up here a little higher. Hopefully give me a better entry. Rocket Labs.
TTSS.
Rocket Labs looks good.
TTSS.
WYHG may resume in less than a minute.
Okay, looking for a bounce here. S&P. There goes Datadog SPX. Looking for a bounce. Okay, watching hedge flows. Still 1-to-1 up-down volume. 1-to-1 up-down volume. 2-to-1 on the Qs down.
WYHG may res in 10 seconds. CBRG.
SPKH.
FSTZ.
TSS.
Okay, it looks like the S&P wants to push through. Let's see if we can get through VWAP here. We're above VWAP right now. We're trying to stay above VWAP. Okay, we're coming into the 12 o'clock hour. I'm looking for some dips to buy. Oracle is one. I'd like to buy more. Ooh, but there goes Palantir. Palantir. Okay, Palantir. What did I have? Palantir. I took some Palantir off. Palantir, January's, okay. Palantir. PLTR. January. Palantir, looks like it wants to go some more. It's up a lot, Palantir. I'm not going to re-enter Palantir, but it does look good. A little dip there, Palantir. It's above the opening range high, the orange line, above the pre-market high, the purple line, above VWAP. Volume looks good. $50 deltas are 12 bucks, 13 bucks. Vertical, do I want to add to these? Palantir looks good. Okay. Palantir.
TSS.
Okay, let's take a look at Palantir 60-minute. I think I said that the Palantir 60-minute looked good, but we wanted the dip if you're gonna buy any. So I won't buy any more here. I'll wait for the next dip like it did into Friday. Okay, so the New York Stock Exchange looks really good, right? So there's no reason to panic or worry about the markets. Doesn't mean we can't pull back in, but NYSE, the comp, let's see what the comp looks like. COMPQ. 3,300 to 3,500 stocks, depends what the current status is, but around 3,300 components to the comp. Let's take a look at the, you know what is really important is, I mentioned this in the weekend video, I don't know if you caught it, but we have the XII, the ARC Institutional Index. This is what institutions, obviously, are buying. So this looks pretty good, actually. Okay, let me move this over here a little bit here.
WYHG may res in 10 seconds.
Okay, so if the institutions are worried, you would see it. You would see it.
TSS.
TTSS.
Okay, so this looks good. Let me just change it. Oops. Let me change this right here. Because we have broken out of a descending channel or wedge.
TSS.
Okay, that looks good. All right, so the fact that this is moving higher tells you what institutions are doing. They're buyers, they're not sellers. Palantir turning up again. Palantir, dip getting bought.
WYHG vaulted down.
TSS.
Palantir looks good. Buy dips. Okay, S&P turning up.
YJ.
Watch it.
LUMN.
And CKT. Watch it. TSS. Watch it.
RCAX. RCAT. LUMN.
RDGT.
RTGT. RCAX.
RDGT.
LUMN. RCAT.
ECLA.
TGT.
RDGT.
All right.
ECLA.
All right, S&P continues. Nice call there, Cayman.
WYHG may resume in less than a minute. ATSS.
and CKT, RDGT, ATSS,
Okay, S&P 500.
CAX. WYHG may res in 10 seconds.
Okay, S&P. Netflix looks good. Amazon looks good.
CAT.
Snowflake, okay.
TTSS.
Okay, here we go. S&P starting to move.
TTSS,
Okay, S&P is on the move.
CAT.
Let's just see what hedge flows look like. Okay, above this level, it gets pretty interesting, right? Let's go 5 minute. Okay, above this level, there's not a whole lot to hold us back. Okay, Amazon's trying to go. Netflix is trying to go. Microsoft turning back up. Microsoft.
CAT.
Palantir trying to push higher.
RDGT, and CKT,
All right, Elf Beauty for weekly looks good.
CAT. WYHG vaulted to the
All right, what's
upside.
SpaceX doing? SpaceX. Okay, SpaceX 60 minute trending.
CKT,
Cerebras, CBRS has earnings this week.
WYH,
Okay, there goes the S&P starting to move here. Okay, hedge flows are starting to turn up. Looks good for S&P.
RTGT.
RDGT, WYHG,
RCAT.
GT, and CKT,
RTGT.
Took a little bit more Palantir off. I'm going to reload on Palantir. Maybe something a little shorter dated. I have the January calls. I'm going to pull back in here and maybe buy some October.
WYHG,
Okay, S&P, we're watching hedge flows. Let's see what this looks like here. Okay, if we start to move this higher volatility in this red zone, we could see prices pop pretty quick. Okay, trying to push through this level now.
YJ.
YJ,
Looks good on the daily. Short time frames look good. Tick cumulative on the shorter time frames was bullish going into Friday. Let me see what it looks like now. 5 minute. 5 minute. Is red. 5 minute. Let's look at the 30 minute.
ECLA,
Datadog still pushing. Datadog. Tick needs to turn up a little bit more. Let's see what the breadth looks like here. Breadth, advanced decline percent. Everything is turned down at the moment. Advanced decline percent. S&P. Equal weight at the highs, just off of the Wednesday all-time high. Number of stocks trading above the 20-day and 50-day are all kind of taking a break right now as the markets push a bit higher. Okay, trying to continue.
RDGT.
Netflix breaking higher. Netflix is breaking higher. Watch Netflix here. Netflix on the move. Netflix opening range breakout.
STKH.
Netflix, watch the 50-day. Netflix, watch Netflix.
WYHG may resume in less than a minute.
RDGT.
Netflix looks good.
WYHG may rise in 10 seconds. Wide check.
RDGT. RDGT. Logic.
Wide check. RTGT. BSP.
RDGT. Logic.
Netflix still going. All right, it's at the 50-day. Netflix is running.
RTGT. Wide check halted to the upside.
RDGT. Logic.
ACDC.
ACDC, that's a great symbol. Great stock symbol. That's pretty cool. Who was ACDC?
RDGT.
TGT.
Netflix, maybe it finally starts going here.
ACDC.
ACDC? Cool name. Okay, ACDC. Let's see who this is. ACDC. ACDC. Pro Frac Holding. That's actually on the move.
ACDC. NESR.
XHLD.
ACDC. What do they do? Fracking, ACDC, ACDC. ProFrac Holding. All right. November 5th. Energy services company, hydraulic fracking, blah, 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 blah.
XHLD.
NESR. WYHG may resume in less than a minute.
XHLD.
NESR. HOG.
Oh, boy.
RTGT vaulted down. HOG. WYHG may res in 10 seconds.
All right, Palantir. Okay, stocks are looking pretty good. 12 o'clock. All right, let's go ahead and change channels here. Where's my phone? Okay.
DTSS.
Market may resume in less than a minute.
S&P fading a bit right now. Netflix still going. S&P. Okay, looking for a bounce. The S&P.
IOBA.
DTSS.
YG may res in 10 seconds.
DTSS. Budget. DTSS.
YG halted to the upside. IOBA. WYHG vaulted down. I will be in.
DTSS. And CKT.
All right, watching the S&P, looking for a pop. All right, Netflix is still pushing here. Netflix looks good. Trying to break through the 50-day. Datadog. Okay, Oracle. Datadog still at top of the NASDAQ 100 and the S&P 500.
And CKT.
Datadog, let me just take a look at Datadog. Just off the highs of the session. Oh, let me just change channels here.
RTGT may res in 10 seconds.
RTGT. WFF. RTGT.
TV Bio.
What I took off? Absolutely. And I don't think it's $200 a share. You know, if I sold it at 330 and, you know, if this got down to 270, boy, I'm back in.
If you're going to say who has pricing power in that universe, does anybody have more?
Datadog looks like it wants to go some more. Netflix is on the move.
At least from a memory chip cost standpoint, the fundamentals have changed in that regard.
RTGT.
They got to pay up. Trying to figure out how to offset to at least protect as much margin as you can. That's a fundamental issue, is it not?
It is if, in fact, your consumer is not willing to pay the price increases that you know are coming.
We don't know whether they are or they're not. At what point do they fall? I mean,
At what time is it?
history would suggest, okay, they obviously have this incredible installed base, but everybody's got a price.
Right. Everyone has a price, but I think given the economic climate you're in right now and how valuable this phone is to all of us, more valuable, as others have said, than your automobile, I would suspect that with strength in the economy, if they are ultimately going to be raising prices attributable to what we're seeing with memory challenges, that the consumer will stay there. And we'll continue with the subsidies look like too. You have to have a fundamental thesis surrounding what ultimately is going to happen, and I think you have to maintain a favorable one.
Make this quick, so I have Anastasia, but if
RTGT.
you look at a long-term 10-year chart, price to earnings multiple or PEG ratio, clearly at the top. Carrie, you were saying 33 times forward earnings is simply too expensive. That's a place to trim if you don't have $15 cost basis stock. But if you get down to 25 times forward earnings, and I'd be surprised if you actually get that low, you add it. So, you know, 27, we start talking about the PEG ratio right now is 3.9. Price to earnings over growth of earnings. It's just too high.
It's a good, I think, mechanism to talk about too, which was the top sector last week, up 7.5%, almost 7.5% the week alone. Best since mid-April. What do you make of that trade right now?
I think you have to differentiate within parts of tech. And I do want to comment on Apple just from a macro perspective. Look, everybody's in the memory semiconductor trade. And I think from a contrarian standpoint, at some point, you're going to resolve those bottlenecks. At some point, those average selling prices are going to come down. Not great for the stock prices of semiconductors, but actually probably great for somebody like Apple. The other thing I would say, the market has been obsessed with free cash flow of the hyperscalers. But if you look at free cash flow of a stock like Apple, it is actually sizable. The yield is about 3.5%, so it's actually better than some of the other ones. So I think as a balance in your portfolio, it does make sense to have something like Apple to kind of compare and contrast with all the high beta semiconductor chips. But Scott, to your point, where I actually find the most value in the tech space right now is actually in those same hyperscalers, because the credit markets are scrutinizing the free cash flow. The equity investors have been a little bit more cautious. But so guess what? There's CapEx, but then there's ROI on the AI CapEx as well. And I actually think when you project out the free cash flow, let's say a year or 2 years down the road, it is likely to inflect back into positive territory. So probably the biggest undervalued trade there right now.
How about Nvidia? Okay, coming off a monster week, up 11%. That was its best week since May of 25. Reiterated today by top sector pick at B of A. What do we think of this? After that week, that this stock woke up big time last week.
It woke up. It is tracing out a similar pattern to which I identified in Apple several months ago. I think the stock is in its the breakout. I think we are in a period right now because we have such favorable fundamental conditions. It is a good marketplace that you see investors characterize investors however you want. Or they are investors like Jimmy who are looking at fundamentals and PE and PEG ratios, or like myself, they're looking at quantitative strategies, the Jane Streets, the Citadels of the world. Everyone's hunting for alpha and new alpha opportunities. And what's interesting about technology is you're seeing new momentum building in NVIDIA, while the momentum is waning in Apple.
Alphabet. What about Alphabet?
So the momentum is actually waning in Alphabet since the announcement last week.
That's right.
About losing the chief science officer.
You know, it was the only one last week that was down.
Yes. Yes.
Right. So tech has this huge week. NASDAQ has this huge week. Alphabet is the only one that's down. Amazon barely did anything, but Alphabet was actually in the red on the AI brain
So
rate.
let me tell you what I do with that information personally. I look at that information, I say, okay, I recognize a maintaining position that's losing momentum. Is there something that I want to do with it personally?
All right, Amazon pulling back in a little bit. Palantir hanging out. What's S&P doing? S&P.
Building momentum in the actual laggard component of technology software. And it continues. Do I trust it? No. I don't trust it, my friend. I don't trust it. I've said all along, if you think software is coming back, I told you last week about Palantir.
Those have been going up too.
Right. I told you about Palantir. I'm seeing right now, this is a market that wants to hunt for the alpha in areas where you can identify an equity name as a laggard and you see new momentum. And in the technology space,
WYHG.
So there's a lot there. Number one on the software thing. So it's up 8.5% last week. Jonathan Krinsky says reports of software's death have been greatly exaggerated. Goldman today says we're at the beginning of a multi-quarter fundamental inflection point. Over the last week, I told you what the index itself did. That's the IGV. Individual names within it. Palantir's huge burst last week is well known at this point. It's up more than 30%. Atlassian was up 40 plus. ServiceNow is up 9.5. Snowflake 7.5. The cyber names like CrowdStrike and Palo Alto up 6 and 5% respectively. Oracle's up 3.5% last week. Why aren't you a believer?
I trust the move in cyber. I trust the move in Zoom Communications, which has the relationship with Anthropic. We are on the cusp of having further IPOs, whether it is from Anthropic, Databricks, or OpenAI. I still think there is going to be significant disintermediation and disruption as it relates to these software.
Watching the growth in 10 seconds.
Okay, Oracle trying to turn back up. Intel looks like it could get turn the corner here.
It's that level, but I'm not just confident in buying these names right now. I'm believing that over the next several quarters, they are going to significantly outperform the return that I'm going to get where I am right now in semi equipment and some of the max.
Snow 52-week high, Crowd record high, Palo Alto
Thinking about
So
Intel, I'm just gonna wait. I'm gonna
today, so,
wait.
I mean, that's been an interesting
See if it
story.
can't turn the corner here.
I think
Rocket Labs, let's see. Rocket Labs, I do want to buy some puts for Rocket Labs earnings,
they were just
hoping that Rocket Lab blows it out and that these puts evaporate.
39%.
Okay, so far,
People were talking
not
about
much here.
no one's gonna touch Microsoft. It all seemed
Rocket Labs at the low
By
here.
the way, goes to 660 from 647.
Data Dog still going. Data Dog.
it's being too high, but the fact is.
Data Dog.
That on calendar. So I'm a believer that Microsoft can continue to run. If you look at Google, it had a really big run from March to the recent high, and now it's come back. People get
Data Dog. What is Hertz doing? Hertz, HTZ. Hertz popped in the morning and then dipped a little bit. Okay, Data Dog.
HT vaulted down.
But we didn't even mention yet, Taiwan semi sales up 45%. You on that name?
It's incredible. I mean, there is demand. We hear about it all the time. How much of it are we using?
Taiwan Semiconductor.
Asking, whatever, Claude, ChatGPT every single day. Building
Data Dog does look good. The security stocks are all in play. Push through the 50-day.
The chips come from TSL.
So the other day he was with me and said Micron's probably going to double from here.
Wow.
So he's super bullish. That reiterated outperform, by the way, Mizuho 1375 is the target. So I mean that's not so far off of the way AP's thinking about it. How about UBS 1625? So that's right in that ballpark, Jimmy, as well. He says he does not think that the associated stocks in the semis related to this whole trade are even close to peaking.
Yeah, well, that's the question: is where are we in the cycle? I bought Micron, Scott, as you know, in two tranches not that long ago. At the last earnings report, just after. Average price 1,000. You see the stock at 877 right now. I got a lot of clients saying, "Hey, why did you buy it at that price?" And the answer is because if the cycle is going to be elongated by years, which is what I think, then buying this stock at 6 times earnings, forward earnings, which is roughly what it is right now, with those earnings growing through the roof, and with the company about to anniversary the CHIPS Act, after which you can start buying back shares at 6 times earnings, it's a great setup. Now, the bear case is that the data centers are going to stop being built. The demand for Micron's chips and everybody's chips is going to plummet. I just don't believe that. I don't believe that when we see all the hyperscaler reports over the last 2 weeks that showed nothing but growth and growth increasing. So I agree with Adam on Micron.
Last comment on chips, Anastasia.
I think the runaway for them is not over, but I do think the risks are building, and eventually these bottlenecks will get resolved. And I think the ultimate beneficiaries are actually those software stocks. So that's where I would be looking to rotate to. By the way, fundamentals of software are still intact today. Loans have rebounded, and looking at earnings growth, it is running about 22%. So I would be slowly pivoting to software.
Okay. We will take a break. Berkshire Hathaway reported earnings over the weekend. They're deploying some of that massive amount of cash as well. Not everybody's happy about that. We'll talk about that coming up.
Okay, Zscaler, Palo Alto Networks, CrowdStrike. All of those looking super, super good. Looking good. CrowdStrike. Looks good. Data Dog. Data Dog.
YJ may resume in less than a minute. KBYO.
RDGT.
All right, looks good. Lunchtime. Netflix taking a break. Microsoft looks fine. Nvidia's starting to turn the corner. Nvidia's starting to turn.
RDGT.
YJ may res in 10 seconds.
Okay. Datadog. These security stocks.
WYHG may res in 10 seconds. SPCG.
RDGT.
YJ halted down.
Fire. Fire, fire, fire.
All right, welcome back. Take a look at Berkshire Hathaway, up 2%, reported on Saturday. A highlight seems to be they bought more stocks than they sold.
SPCG.
The
RDGT.
is some of that massive cash wood.
WYHG.
Declined for the first time since early 2022. So Michael Burry on X posted, quote, "My biggest fear for Berkshire Hathaway was that when Warren finally stepped down, the successor would be too old and otherwise not Warren, so would not have his patience for the fat pitch. I believe this fear has come true. Do not find Berkshire an attractive investment going forward." What do you think, you on the stock?
I respectfully disagree. Here's why. If you strip out the stock holdings from the market cap and just look at the operating companies, it trades at about 13 times forward earnings. You know what those operating companies are? Burlington Northern, Class 1 Railroad, Berkshire Energy, which is huge, Precision Castparts, Aerospace. I mean, I can go on and on, but you get the point. You're getting basically 13 times forward earnings.
All right, S&P still fading a bit.
And then on top of that stock portfolio, you look at some of the things they've done, like buying Alphabet on the secondary, buying their own shares. I disagree. I find this compelling here.
So UBS raises the price target to 604 from 585. They cite the earnings. beat
Datadog
and
back above the
deployment
50-day.
revenue.
Big move here.
Reiterates hold. CFRA.
Opening
reiterates
range
hold.
breakout.
They talk about the further evaporation of the Buffett premium.
Correct.
Latest one, if I remember
Yes,
right.
and the price was 431, which would indicate
GT.
that's not a good trade.
So what do you think of it here, though?
I think that I actually like the fact that Greg Abel, first of all, is buying back stock. I like that. I always want to see Berkshire doing that. I like that he's being aggressive. He's putting his signature on the company. 10 billion towards Alphabet. Taylor Morrison purchased Jimmy, what, Home Builder, 7 billion.
It's like 5 billion.
I was close to 7 billion. I like the fact that he's putting his signature. Now, are some of the deals not going to be good? Of course not. That's what this industry is. But along the way, to make an omelet, you have to crack some eggs. And I want him to do exactly not not sit in the chair and live off the reputation.
Sure,
which
but,
was still in a
but
position.
part of Mr. Buffett's, genius was assembling mountains of cash at various times throughout Berkshire's history, waiting. Pitch comes right down the middle, boom,
It's a lot of
out of the stadium.
Okay,
Right?
Can I just respond real quick?
Yes, sir.
When he was doing that at what was
WYHG
really historic moments for this country, those, to your point, those were big swings, but those were big deals. The deals that Greg Abel are doing, they're de minimis. They're very small deals.
How about this? Here's not so hot of a take. It's been 5 quarters since Warren Buffett announced he was stepping down. The dissolution of the Buffett premium, I will submit, has already happened.
But not necessarily with the Alphabet. When the Alphabet news, if we could figure a chart, a custom chart, guys, and if you could do that for me, please, from the day that news broke, that Buffett personally was the one who got into Alphabet to the most recent period. I'm guessing it's going to look pretty good. I think the Buffett premium still counts for a lot.
Okay, I mean, so, you know,
You don't think so?
I think it has diminished a lot. I don't think an incremental buyer or seller right now is doing it on Buffett's impact, notwithstanding what you just cited. I would also point out, like, let's put relative numbers.
That's a small sample size that we're looking at this chart, guys. Thanks so much for doing that for me. So from mid-July.
Well, he announced it in
What is that, a
December.
month?
He announced it in May. Wait, when did he do this? May of 2025. I mean, when that announcement came out, granted, he stepped down in December of last year, but it's really been 15 months since the market has said, hey, he's stepping down. That was the catalyst for people to start drawing down the Buffett premium. With regards to Alphabet, excellent point. I would just put it into perspective of $10 billion. I mean, like, they
Low
make
ticker
that in
minus 800.
336 billion in treasuries, 4% 14 billion a year just in, okay, my timing's a little bit off, but I mean, that's just a drop in the bucket compared to their cash.
And I mean, what does that stock look like, by the way, the Berkshire shares from the day that Mr. Buffett said that he was stepping down as CEO and that Greg Abel was taking it full time?
Underperformed, but which goes to my point, which I do think the Buffett premium being removed has mostly happened. Could be wrong. Who's going to know? This is where a market gets made, but I think it has mostly happened. Again, I don't think the incremental buyer or seller here is doing it on the surprise factor of, hey, Buffett may not have its hands on the leverage.
Slightly underperformed. I'm looking at it. The high on May 2nd was 542. We're at 530. We're 530.
Is it still, did it get above $1 trillion in market cap? It did, didn't it?
Yeah,
Did Berkshire go above $1 trillion in market cap? I don't know if it's still there, right?
Yeah, it's 1.1. It's 1.1 trillion. But look, we began the show talking about a really good economy, talking about broadening out. Well, this is a holding that's a classic example of the broadening out. Where are they? They're in energy. They're in manufacturing. They're in healthcare. They're in insurance. So if it's a good economy and everything's broadening out, you should expect that they'll do well. You'll learn a lot about
including Apollo, Blackstone, BlackRock's Global Infrastructure Partners Unit, Brookfield, Goldman, and KKR are entering a partnership with NVIDIA to provide $500 billion worth of financing. They cite that to 5 people briefed on the talks, and they say this deal could be announced as soon as Monday. They don't really give us much detail about kind of where that money would come from, debt, equity, and what specifically it would be invested in, other than just to say it will be part of a big AI financing deal comprising about $500 billion. You can see NVIDIA moving slightly lower on those headlines, down about 2.6% right now. Also, as part of the article, it said all of the major players, including the financiers, as well as NVIDIA, declining to comment. We have not independently verified this story. We do have calls out, and we will get back to you as soon as we learn more.
Futures just dumped there. What's going on?
Thank you.
Futures big dump.
Beat goes on, right? The AI beat goes on.
These are numbers. Oh, sorry.
Yeah, real quick, then.
These are just numbers, 500 billion of additional financing. And you go, really? Let's think about that in terms of size. Wow. Yeah, it's a gargantuan undertaking that we have to build out the AI ecosystem. It's going to take years. It's going to take capital, equity capital. It's certainly going to take private markets as well. But again, I think we obviously recognize that it's not a new development.
Intel on the move.
2.75% or so. Tessa Brewer has the news headlines, the CNBC News update for us. Hi there.
Hi there, Scott. A Ukrainian drone attack.
Intel is on the move here.
Killed 13 people, including a child, according to
Okay, let me buy some Intel here. See where this goes. Intel.
750 miles inside the border. Neither side's claims have been independently verified. A pedestrian died in Dallas late Friday night after being struck by 2 vehicles, including an unoccupied Waymo robotaxi. Police say the man first pushing him into.
All right, I bought 55 Delta October.
Waymo says the robotaxi sensed the pedestrian and was able to slow down. He died, though, at the hospital. Police are investigating. So far, no charges announced.
And the crew of Meta CEO Mark.
100,
After
100.
responding to a radio request from a small boat nearby that ran out of fuel off Alaska's coast. Meta spokesperson says the crew never heard the call, and another ship was already assisting when the crew actually saw the message. Zuckerberg was not aboard that yacht. Scott.
Okay, Contessa, thank you so much for that. That's Contessa Brewer. Coming up next, your ETF Edge. Dom Chu tells us what's coming up. Hey there. All right, so Scott, the world of ETFs is growing by leaps and bounds, and a lot of it's being powered by the rise of active and thematic funds. AI, an obvious driver of that boom, but outside of AI, where are some of the bigger thematic opportunities? We're going to chat with the fund manager on the hottest parts of the market that should be on your radar in the coming months. That's coming up on ETF Edge on the halftime report. Keep it right here.
NESR. And BTQ. YJ vaulted down.
Okay, Datadog. All right, let's find SoFi, Cerebras, Adobe. Okay, let me put a Datadog right here. Datadog's still going. Datadog.
BTQ.
All right, that's a hell of a move there on Datadog. Still going.
DGT may resume in less than a minute.
Intel trying to push a bit higher on that news. NVIDIA news pulling back. NVIDIA pulling back. Intel pushing higher. Not sure if that has anything to do with it, but Datadog's still pushing.
NESR. RTGT may rise in 10 seconds.
RDGT.
And BTQ. WYHG may resume in less than a minute.
RDGT.
RTGT.
All right, welcome back. I'm Dominic Hugh with your ETF Edge on the halftime report. AI excitement's being at least the driver now of thematic ETF trading, but some of the bigger thematic opportunities could lie outside of artificial intelligence. Joining me now for this conversation is John Davi, the founder, CEO, and CIO of Astoria Investment Management. AI, we know the returns, we've seen them, there's questions about valuations, but if you're trying to find that next thing that should be in your portfolio outside of AI, where should we be looking?
Yeah, so we would say you should evolve your portfolio to AI adopters, right? So we like banks, right? Banks are heavily invested in AI. They have a strong IPO calendar, strong M&A calendar. They're cheaper than the market, strong balance sheet, and they have a favorable rate environment setup. So KBWB is one ETF that we're using to play that. The second one is we just think like in general, you should evolve from the US hyperscalers to other beneficiaries. So we like emerging markets and we have. So we sold, about 2 years ago, we underweighted like US hyperscalers. We bought emerging markets, and they're also part of the AI trade, and they've done quite well since.
And how do you exactly kind of get that exposure? Is it just emerging markets in general? They can just buy a country or a kind of broader a thematic fund for that? Or do you have to look at the types of industries or the geographies specifically that you want to go into?
Yeah, so we chose the broad emerging market, IMG, cheap, liquid, and rather than going country specific,
Blockchain may
where you
resume in
take
less
a
than a
lot
minute.
of country specific bet and stock specific bet. We just think IMG in general. It's up 20% year to date. It's outperformed the hyperscalers here in the US.
All right, so emerging markets and banks, possible beneficiaries of that AI boom. John Dobby, thank you very much for that. Now we're going to continue this conversation over at etfedge.cnbc.com. John is going to be joined by Nico Lacqua, the CEO of Corgi, which Scott has made a lot of waves for bringing a ton of funds to market in a very short amount of time. We'll ask him why an AI insurance company is getting into the ETF business. I'll send things back over to you.
All right, Dom, good stuff. Appreciate that. That's Dom. Speaking of the ETF business, Joe just made a number of moves in energy in his ETF. That's the best sector today by a lot. Timing
Blockchain may
pretty
rise
good.
in
We'll
10
talk about that.
seconds.
PCLA. WYHG.
Okay. XII. One of the things it's good to watch is what institutions are doing. Institutions.
WYHG.
All right, Tesla just sitting here. Palantir drifting a bit lower at the moment. Futures, no bounce yet. Futures, no bounce. Hedge flows. Okay, we're banging up against these two levels here.
RTGT may resume in less than a minute.
This purple should be support. Positive gamma. NVIDIA is still drifting lower. NVIDIA.
WYHG.
SOXS. RTGT may rise in 10 seconds.
Palantir. Datadog still going here. Datadog. What a bullish day. We're going to bring it. We're going to go all the way back up to the highs. Datadog. That's a hell of a move. Datadog. Datadog. Elf Beauty.
RTGT bolted down.
WYHG.
All right, welcome back. Oil's back above 80. Okay, that's a headline in and of itself. So that energy is up, 3.5%, 3.6% as a sector, by far the best. There's your 4% move in crude. That move today is suggestive of we can't pull the right cards yet to get the straight open,
WYHG.
and the market's making the bet that oil's going to remain elevated for a longer period of time until we have a hand.
Netflix, a little fade from the high. These software security stocks are just doing really great today. Palo Alto, Workday, Palo Alto, CrowdStrike, Zscaler, Datadog.
Mid nineties.
We thought we were going the other direction.
We thought we were going the other direction. And let's double click on that for a second. What is that? That's position.
YG may resume in less than a minute.
So to date, energy's up 8%, S&P's up 3%.
Okay, let's see.
Energy's down nearly 3.5%, while the S&P's up 3.5%.
Well, because we keep hearing that we've got a deal, we're getting a deal, they want a deal, and we don't have a deal.
We don't have a deal. And people push to the sidelines. Longs of energy, okay, are reduced. Disbelief builds surrounding the ability for energy to go higher. And I look at that and I look at the setup and I see what we did going to 10% in energy and say,
Remind us of
I
the
like
names.
where we are.
Remind us of the names that you just added, so people have it right. in front of them.
Across the board, I'm just going to read it to you because it's quite a bit. Cheniere, Conoco, Enterprise Product Partners, Carry, Exxon, Kinder Morgan, ONEOK, Targa, Texas Pacific Land. I know Jenny likes that. Williams Company. So we're across the board getting very aggressive.
You're probably 3 times
10%,
Yes.
10% energy weighting and responding to what we're seeing in the market. And I like the setup because I don't think people trust energy. I think people think energy is going right back to 65. I can see it going to 95.
Well, let me put you this way: you get a deal, you get the straight open. Energy probably is going back to 65.
How long is it open for?
Well, I don't know.
And
That's the
is
whole wild
it
card, the whole
really
thing.
though? Is it really?
I mean, open.
Open, but even if it's open, we have drawn down significant inventories. And actually what also happened is we bumped up our production. You mentioned Cheniere, whether it's LNG production, we bumped that up. So the pipelines
YG halted gas.
continue to do well. And also, Scott, I think, gone are the days where we're going to rely on supply coming out of the Middle East. It's all about getting supply in other places, whether it's US, Brazil, Guyana, and Venezuela. So I actually think there's still a lot to do in energy, even if the Strait does reopen. And while we're still negotiating,
Taking some notes.
I think it's definitely hold in the portfolio.
Yeah,
because it gives you
NVIDIA
optionality
didn't like that
if-
news,
if there's another
or the
geopolitical-
markets didn't like the news. NVIDIA getting financing.
So three of the names or two of the names that you mentioned, just as an example, ExxonMobil, you know what they do. They not only explore
Intel-
but they
Intel popped on that news off the low.
That's, by the way, where the bottleneck is in the energy industry. It's in the refining sector, which ExxonMobil is a big player in. Then you get something a little more specialized, like Cheniere, which you mentioned, and Anastasia, what you were just saying. It exports through its pipeline. Gas. My point on this is analyzable. And much of what I just said has little to do with whether oil's at $90 a barrel or $70 a barrel. These are fundamental forces beyond the price of oil. They have to do with innate capacity, innate infrastructure. I find it very easy to analyze.
I would say that energy is not that important to the market overall.
Datadog continuation.
The large companies don't use much oil or gas, that's for sure. They don't need it. The U.S. is independent. We are net exporters, not importers. And I think it's fine. It's a good trade. There's no reason.
Datadog at the highs.
It's been the best of the last year. It's the best, up 41% as a sector over everything else. You can AI me till the cows come home. 41%.
I was gonna actually AI you, Scott, because you can't.
Okay, we're starting to bounce here, S&P.
And so, for example, as energy infrastructure investors, we think about installed power, we think about new power generation, we think about mobile power. And guess what? For all of that, you need the molecule, you need the natural gas, you need the oil.
Power stocks, by the way, got a positive note today on the street.
Scott Humor, may I make it quick? Is it a trade or is it an investment? ExxonMobil, bellwether for the industry. Last 5 years, annualized 27% return per annum. The S&P 500, 13%. It's an investment.
I can encourage anyone to do one thing. It's buy a refiner. We're coming into hurricane season. I hope there's no hurricanes. But if in fact there is a hurricane, the disruption is over.
What do you like the best? Marathon,
Well,
Phillips
I
66,
don't think so. I'll stay with Valero, but you can have Phillips 66, you got a Marathon or Valero, any of them.
All right, Santolis next.
RTT halted in that time.
Okay, we need to get above this level right here, 99 percentile at 77.60. Okay. That right there is 99 percentile. Okay, market's very choppy. Up down volume. Up down volume is saying 1-to-1 on the SPY, nothing there. 1-to-1 on the NASDAQ Composite. 1-to-1 on the New York Stock Exchange. 2-to-1 down volume on the Q. So tech is getting its share of profit taking from last week's run up. Still, there's no reason to panic or to be concerned that the markets are going to drop dramatically. We have too many things pointing to bullish resolution. This is XII, the ARC Institutional Index. It's at highs. The New York Stock Exchange, NYSE, the composite, 2,400 components, 75%, 70% of which are U.S. stocks. About 25% are ADRs, American Depository Receipts, and about 5% are tracking stocks, ETFs, and REITs at the last count. Okay, so the comp, the NASDAQ Composite, this is approximately 3,300 stocks, 3,300 stocks. Now, is this a top? I don't know. Right now, it's just stalling. New York FANG components, 10 stocks. Okay, we're right here at the high. We were above it this morning. We were trying to break out. Now, let me just change this to a little bit lighter so you can see a little easier. Okay.
Watching may rest in 10 seconds.
All right. So technically we broke above it today. RSI is still green. MACD, stochastic slight upward tilt. MACD is bullish. So momentum should carry through into tomorrow, I would think. All right, New York bangs are all mixed right now. Intel trying to turn back up. Intel. Datadog at the highs, just keeps sprinting higher. Datadog.
And CKT. OMBL.
S&P shorts covering, looking for a bounce. It looks like a bear flag for now.
Watch it.
Okay, we got this 99%. There's not a whole lot going on today. Let's see, net open interest. Okay, there's a big level right there, 99 percentile at 77.50. We should bounce here, I would think, or not. If we drop below this.
Senior markets commentator Michael Santoli, also the overtime co-anchor, joins us now for his midday word. Yields are up. That's one issue. And the CPI is looming on Wednesday. That seems to be the other.
Yeah, Scott, yields up. Oil obviously has a bit as well. And, you know, the markets, for all the strength that was shown, getting to new highs and kind of having the heavyweights in the index push it there, we haven't changed the dynamic, which is yields up, oil up means the market is not going to be very broad. So you have negative breadth today. The non-tech parts of the market aren't doing a whole lot. Neither are at critical levels, I wouldn't say, either the yields or oil, but it does put things in check. Obviously, did a lot of buying last week, especially in some of those names that had been under pressure. To me, the whole story was hyperscalers re-engage to the upside, and that turns a broadening market, but a stuck market, into one where the index can make progress.
Good to have NVIDIA waking up, although it's given back 3% today, but it was quite a week last week.
Right, exactly, and that was definitely part of that story. So you want to still go back to the old Mag 7 rubric or not. And this gets back to, you know, obviously, you know, it's a long-standing thing about you can have broader market, you can have the
Watch, Intel's trying to do something here. Intel turning the corner after a secondary offering was announced this morning. It dipped. Now it's starting to bounce.
You kind of get the S&P doing what the bulls want.
RTGT may rest in 10 seconds.
I'll see this out there. Good stuff. That's Mike Santoli. Let's play some options action now. Oliver Rennick is at the SIBO Global Markets.
200-day.
What do you see there?
Hey, Scott, looking at software stocks, which are getting quite a bit of love and otherwise quiet or stuck. As Mike put it this morning, in the sector ETF IGV, traders bought twice as many calls as puts. But the most notable action in the fund is that the most popular directional trade was selling puts that suggest the sector can follow what we've seen in stock charts like Palantir and Microsoft. Options falling in Palantir is more than double the 30-day average today as the stock pushes towards year-to-date highs. And the combined premium in Palantir and Microsoft options is nearing $1 billion on the day. The ratio of calls to puts is 2 to 1 in Palantir and almost 3 to 1 in Microsoft. By the way, options volume in the S&P overall is muted this morning after a record-breaking week for call option buying last week. So I think that makes this fairly aggressive or bullish action software even more notable stuff.
All right, good stuff. Appreciate that. Look, Oliver, thank you. I'll see you this afternoon. Oliver Rennick. Finals after this break.
Okay.
Fade out.
RTGT.
SPY trying to turn up now. Intel. Intel turned back above the opening range high.
RTGT. Fade out.
INTW.
Intel back above the opening range high. New York Fangs are all mixed. Microsoft trying to bounce. Nvidia's at the low. Amazon off the high today. Meta off the high of the day. Netflix off the high of the day. Apple trying to turn. It's like these are all a mess right now.
RTGT.
Oracle trying to turn back up. Intel bouncing. Datadog and the software security stocks look good.
Fade out. RTGT.
OFAL. RTGT.
WYHG. RTGT.
INHD.
Wow, Datadog, they just keep buying. Sure looks indicative of institutions buying the dip. If you look at Datadog, this is Intel. Datadog,
Fade out.
that's a pretty solid day of buying here. Like to see volume above Friday's high volume. Right now, we're about 50% of Friday's volume. And we'll continue to push a bit higher. Datadog, Palo Alto, CrowdStrike, Zscaler, all catching a bid. Do I have any Zscaler left?
Join me closing bell 3 o'clock. Tony Pasquarello, Goldman Sachs. We mentioned his commentary about this bull market. He'll join us this afternoon. Michelle Ross. We'll talk some biotechs. Doug Clinton, Brian Levitt, Stephanie Lane. So I hope you'll join me then. See you in a couple of hours.
My favorite energy stock that Joe doesn't own but may is Transocean.
Okay. It's $5. Maybe that's why he doesn't own it. Anastasia.
Private markets, I think a lot of that is a
What's
place
Trade
where
Desk doing? Trade Desk.
Derek.
As for we didn't confer on this, it's Blackstone, biggest in the private equity market, 16.9 on a roll.
Julio. You like that one?
That's funny.
And CKT.
AT&T, Verizon. Moving higher. AT&T and Verizon.
For the major averages, I'm Kelly Evans, and welcome to the exchange. S&P's down 5 points right now. The memory trade, by the way, is so last month now, as security and networking names lead the markets today. Travis Prentice of the Informed Momentum Company told us
Sure enough, Palo Alto, CrowdStrike, and even Datadog, which sold off after earnings last week, they're back in traffic speed. Elon Musk says AI agent traffic will top number EA joins us on the heels of a new proposal that would recall products from Walmart and Kroger as the salmonella outbreak grows. We'll ask the commissioner about all of that coming up.
Verizon, AT&T and Verizon.
Friday, enough to take Fed rate hikes off the table this year. The market is still pricing in a hike in September. We're joined by senior economics reporter Steve Leisman. I guess, Steve, they still feel like we need a little bit here, as long as it's not, you know, a lot more than that. But
What's T-Mobile? T-Mobile, TMUS.
Because for a couple of days tomorrow we get CPI. That's going to be more important. I had a very different take on the job market data for Friday the vote. From what I can read, at least the press talked about this idea of population that may be gone.
Datadog, still going here. Datadog. Datadog, we did see a turn back above the 20 EMA on the 60-minute. Now, we noticed this earlier on this morning when it started to move above the 10 EMA, the dotted line. Following through now. Okay, it's up. It's up 23 bucks today. Datadog. Looks good. Datadog. Up $23 and still going here.
Came in a little bit, but here we are.
70, probably following oil necessarily. One of the interesting things is that we had our retail market. It was pretty good numbers. 0.3 down a 10. Consumption has remained relatively stable while oil prices have surged. That may tell the Fed that you've got good, strong underlying demand there, and you're not having an offset to the supply shock and a demand reduction. So that's a little bit inflationary to get these kind of strong numbers amid the oil price shock.
Perfect segue to our next guest. Aditya Bade joins us now.
Rubrik on the watch list.
And Aditya, we were just talking about yields are on the rise. Steve's data shows retail spending is strong even in the face of the oil price shock. And you guys still think we're going to get
Rubrik on the watch list.
Yes, that's right. So the way we think about it, and I'm not surprised that I'm broadly in agreement with Steve once again. The way we think about the Fed right now is that inflation's keeping the score and the labor market is the tiebreaker. So the focus is very much on CPI over the next couple of months. CPI.
Rubrik.
As long as that holds up, I think the Fed is still.
No, I didn't put it on there. Put it on the lower part. Rocket Labs. All right, looking for the earnings.
Full employment, 4.1% unemployment would be consistent with that. They've been telling us that break-even job growth was close to.
Rubrik is on the extended watch list, right? Let's see. I decided to put Rubrik on the extended watch list and Rocket Labs because it had earnings tonight on the watch list. So the extended list at the bottom, Rubrik's down there.
Inflation doesn't take care of itself.
RK.
Through supply shocks because it's like, I don't know. You get a scar.
Rubrik.
People say you got to treat it, right? And there's two ways inflation goes away: recession and/or rate hikes. Which school are you in? Are you in there's a persistence to inflation that, if not addressed, continues?
So the Fed is to take the supply side for what it is.
Yeah, it looks good. Nice breakout.
was how much of the
Rubric.
supply shocks will abate over the next several months and how much.
Let's see, SPY value. Okay, value and growth. If you looked at the weekend video, you know what I'm talking about. Is still trending. These metrics over here were all green coming into the close on Friday. Now they're all red except for large cap value. Interesting. This was all green.
Nothing goes wrong. You're still at 2.5, and if you're at 2.5 on core PCE with the labor market in equilibrium.
Okay, energy leading today. Healthcare, materials. Energy was off last week. Real estate was up. Real estate is down this week.
For the rest of this year. He said, I think we're at 2.3%.
Okay, data dog at the highs here.
Where's the problem? Why should we be hiking?
So here's what makes me nervous about the way the Fed talks about inflation. We know we have a residual seasonality problem, which pushes up inflation over the first 3 months of the year, pulls it down over the rest of the year. And every time we get to this part of the year, the Fed starts looking at 3-month averages, 6-month averages, but we know those are going to be a little bit suppressed. If you have a seasonality problem, the most intellectually honest thing to do is to look at the year-over-year rate, and the year-over-year rate is very, very far from target right now.
Can I explain what residual seasonality is for those who may not know? It's we try to adjust the data for seasonal changes, like people going back to school, come back to work, going on vacation, but there's still some seasonality. Right? Over-adjusting is a different problem. It's a problem with the model, but residual seasonality is seasonality that's still there after we see something.
Yeah. So last month when you saw this kind of big, was it big job losses in local government, but that might have had an education tweak to it.
What's App 11 doing? App, let it bounce at all? App 11? A little bit. App 11.
I was just going to say, I think
Citigroup.
perhaps the underlying
Callaway Golf. Still fading there, Callaway Golf.
I think there may be some. We think there was a question. There was a question after
CBRS, Cerebrus.
some of the commentators maybe
Nice pop here, trying to break higher. It has earnings. Was it on Wednesday? Wednesday, the 12th. Cerebrus.
Maybe Kevin is a little bit more hawkish than he was initially given credit for. I don't know how the long end reacts to that. The long end might end up rallying if he comes in and cuts rates. That would be another reason. So I was just going to throw to, I think in this
Cerebrus starting to rally. Earnings on Wednesday.
When you read the preamble of what he wrote, he makes it pretty clear that it's 2%. It's not 2.5%. That's what made me think about what you said. But do you think that Warsh will step up to the plate and hike rates in order to really get it down to 2 and not live with 2.5?
So this is the big question, right?
Cerebrus.
Two questions. The first one is, will the committee allow him to do what he wants? Right now we have three hawks and roughly 3 dogs. I think Paulson, Williams, and Bowman are pretty far from wanting to hike rates. And the remaining 6, 5 excluding Warsh, I think those 5 pretty much could go with Waller. Right. So I would listen very carefully to Governor Waller. He's the one that's given the clearest guidance.
Okay, S&P turning back up.
So that's one question. Will Warsh get what he wants? But then on Warsh, he was very clear that the target is 2% inflation, but which measure? I think there he muddied the waters a little bit, and that's where markets got a little bit no. What we previously thought.
All right. We'll say CPI.
Not the end of the conversation by any means.
And what's the quickly? What's the expectation for CPI in the morning?
I don't have
We're
it.
looking for.
Go ahead, Adia.
Yeah, we're looking for 20.
All right, S&P 500. I bought a few 77, 75
So much lower in July than June, but
calls at the low here. A little bit out of the money. See if we can't get a rally now.
Watch the year over year. To your point, I'm excited to see what we have.
You're a 3-month annualized person.
I am a 3-month annualized person. I've always been. I like the trend. The near.
Yeah, whatever.
What do you know?
think they want to ride with him going forward. I think the autopilot of this all is interesting. So there's this app that basically lets you copy trades of famous people. I just say famous people because you can copy Leopold trades, or you can copy Nancy Pelosi's trade. Nancy Pelosi trackers would be most followed and copied baskets of stocks on there. And they love the Leopold roller coaster because it gets smoothed out a little bit. Autopilot doesn't use leverage. It doesn't short stocks. It basically just sees whatever's in its 13F filings. It's on a delay. And so you just pick the stocks that are in his basket. And that portfolio has done pretty well. It fell 30% in July, but it's still up 53% since its launch back in March. So if you're not leveraged and you don't have these massive swings that Leopold does, they're still riding with their money.
I love how Leopold is just, he's a fun member. He's having a good time on his honeymoon. Maybe it's going to the moon. All right, my winner is Burger King, which has dethroned Wendy's as the second largest burger chain in the U.S. Can it take down McDonald's next? As of Friday, Burger King has more system-wide sales than Wendy's, CNBC reported, sagging back the two spot it held until 6 years ago when Wendy's claimed it. These are two chains going in opposite directions. BK is on a heater after launching a revamped Whopper and improving its ingredients and customer service across the board. Same-store sales are up for 5.
Palantir. All right, so Palantir, we're looking for that to follow through in the coming weeks. Palantir.
Revealed on Friday that U.S. comparable sales plunged 7% in Q2, making that 6 straight quarters of declines. New CEO Bob Wright, who was brought over.
Oracle trying to break out here. Oracle trying to break out above the opening range high.
He said our quality differentiation has eroded our value proposition this weekend, and we have not consistently delivered the experience customers expect from Wendy's. Both chains trail McDonald's by a long shot, but even so, the resurgent Burger King is closing the gap.
Okay, Oracle trying to break out. ORCL trying to break out. We're at the opening range high right now. Okay, the daily looks good for the 50-day.
Wendy's is really struggling, so I actually want to talk more about Burger King's versus McDonald's because that seems to be a more compelling battle at this point. And even though the gap is very large right now, Burger King made the correct strategic decision to focus on doing the one thing very well. That one thing was make the Whopper better. A creamier mayonnaise. They had fresh vegetables on top. They even switched from paper wrapping the Whopper to putting it in a box so the burger doesn't get smushed whenever you're transporting it. That approach has done very well. They think that they're winning back customers that long ago ditched the brand. They also think they're taking customers away from McDonald's. Meanwhile, McDonald's has tried everything. They launched a McValue menu with 10 items under $3. They have the big arch burger that remember CEO took a very small bite of. They have 6 new caffeinated beverages that they're trying to throw at Gen Z. So they're doing a lot. They're throwing a lot of things at the wall, but nothing is sticking like just making your best burger even better.
Yeah, this was interesting from both McDonald's and Wendy's reports. They said that these collabs and tie-ins with pop culture references like movies and sports just really weren't driving traffic the way they used to. So Wendy's had this big tie-in with Minions and Monsters, and that just kind of fell flat. And similarly, McDonald's said all of our promotions, our value menus, you think you could just throw Grimace out there and people would come flocking to McDonald's, but that is just not working anymore. Burger King actually had a successful one of these working with Star Wars for Mandalorian movie that came out. So it's not really the days of old where you can just throw in any pop culture time and have it work. So these fast food chains are going to have to reevaluate their promotional strategy. That seemed to be a very interesting part of this report to me.
That's why analysts are so bullish on Burger King too. One Bernstein analyst said that this feels like a proof of concept, durable growth driver because most of Burger King's new traffic came from just a normal customer base. What that means is that they did it without heavy discounting. They did it without this crazy promotional machine spinning up and trying to get customers through the door. They barely raised menu prices too, and we still saw those sales go up. It's a very durable move to McDonald's and above Wendy's. It's not something that's built on the backs of a one-off promotion.
Still got a long way to go to catch McDonald's. As of 2024, McDonald's held about 48% of the U.S. burger market compared to Wendy's at the time at 11.5%, and Burger King had 10%.
I thought it was close to that. saying like Burger King's coming with the ground. It's really not. All right, we're gonna take a quick break and come back with a story about Buc-ee's.
At Forest Toyota, we're South Carolina's #1 Toyota passenger car dealer. We've earned that title the only way we know how, by doing things differently. No games, no running, just a simple, transparent, fast buying experience, putting you in the driver's seat. Plus, try before you buy with Track, Toyota's exclusive rental Toyota program. That's
CBRG.
There goes Oracle. Oracle on the move, Frano. There it goes.
ABCL.
Oracle on the move.
ORCX. ORCU. NUSR.
And CKT.
All right, sorry about that.
ORCX.
Okay, we're starting to get a move on with ORCX, ORCU, ORCL,
RDGT.
AL1.
Are these realistic seats you plan to flip, or is this getting to be a wish list when you include the chairman of the House Financial Services Committee?
Well, I think it's reflective of what we're seeing happening across the country. We have 58 districts across the country that we have opportunity where we're on offense, where we have opportunities to take back the House. And yes, some of these are districts that were Trump plus 11, Trump plus 15, even higher than that. And it really reflects how people are reacting to the broken promises of Republicans. They have all become a rubber stamp for Donald Trump. They are not interested in serving the communities. We are an independent branch of government.
Oh,
We
shut
need
up.
folks who are going to run the step
You
for
people
them
are so
in
full
every
of
part the
shit.
country, even in these traditionally red
Susan
districts.
Del Bene with us live on Bloomberg. All around us, millions of things are harder. The network of hardware
It's so
and
full of
software,
crap.
systems and sensors,
We're the good
products and
ones. You're the bad
technologies,
ones.
working seamlessly together behind the scenes. You may not always see the result, but you feel it every day.
ORCX.
At the heart of it, Honeywell Technologies.
In the new Amoxicillin factory, we have revolutionized the coffee world by making a tech that is 100% coffee and nothing else. Discover the new machine and tabs online.
The first day of college is a major milestone and the result of smart financial planning. Financial institutions make a difference by supporting clients when it matters most. Today, clients expect online banking, investment apps, and digital advisory services that are secure and easy to use. AT&T Business delivers the secure, reliable connectivity financial institutions depend on to move data and enable decisions in near real time and help families plan for what's next.
Some see heroes, others common egos. We see the era of billionaire athletes, a fad to some, the future of money to others. We see crypto's trillion-dollar swings, the end of jobs, or the end of human struggle. We see the endless funds fueling the AI hype. Others follow the noise. We follow the money. GCL.
You're building something real, people should be able to tell. That's why we built True Identity Services. Not as a trial or a promotion, but as a better way to get started.
And
What? So you're saying people get a website, domain, email for free? What the fuck?
None, no catch.
Okay, but why give services away?
Because starting a business is hard enough already.
So you're betting on their success.
Exactly.
250 years ago, America was built on freedom, adventure, and the open road. This July, celebrate America 250 with Campers Inn. Get freedom credits on every new RV, $500 on travel trailers, $750 on fifth wheels, and $1,000 on motorhomes. Plus, save 17.76% on service labor. And Saturday, July 18th, we're giving away.
And it's 121 on Wall Street. We do check markets all day long here at Bloomberg. A little change now on the S&P 500 index, down under 0.1%. Down the S&P, NASDAQ 100 index, and yes, Russell 2000 index, they are all in the red. S&P retreating from Friday's record. Right now, it is down 3 points. The index down under 0.1%. If there is a reversal, any advance today will be another record on the S&P. So currently holding close to a record of 77.53. The Dow now below 54,000, 53,896. Dow Industrials down 141 points, a drop there of 0.3%. NASDAQ Composite Index also down 0.3%. The Bloomberg Mag 7 Index down 0.1%, with a VIX, Wall Street Sphere Gauge, holding just above 50. 2-year at 4.23%, the 10-year at 4.70%. Gold, meanwhile, up $17 the ounce, up by about 0.4%. Spot gold currently trading at $43.59 the ounce. West Texas Intermediate crude now up by 4.3%. WTI 81.54 barrel of Brent 87.13, up by 4.3%. Shares of Apple are trading low right now. Apple has been downgraded to an underperform rating of Jefferies due to concerns about the outlook for the company's iPhone. Apple shares today down low by 2.1%. Recapping, stocks lower, oil higher. West Texas Intermediate crude up 4.3%. S&P down under 0.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcast. I'm Charlie Pellet. Joe Matthew. This is Bloomberg Business Flash.
All right, Charlie, we appreciate it. As always, Charlie Pellet will return with more on the markets in about 20 minutes' time here. A big part of our program every day, live from Washington. This is the Monday edition, and glad you joined us. You know what is moving higher? Cyber stocks, both CrowdStrike and Palo Alto, up over 5% each as OpenAI, I should say, takes to Twitter. To write, we're expanding our cybersecurity initiative, Daybreak, and introducing GPT-5.6 Cyber, a new model for advanced authorized cybersecurity work. OpenAI writes, as the threat landscape evolves, we're putting frontier intelligence in the hands of trusted defenders before attackers can deploy offensive AI scale. Interesting timing here as the letters fly in Washington. I'm not even sure which one to start off with. Mark Zuckerberg seemed to get most of the juice in coverage this morning with a 6,500-word manifesto. Headlines, the future is for everyone. Subhead, the path to a positive AI future. Calling this an incredible moment in history. The use of superintelligence beyond human capacity to create and discover extraordinary new things. Build new businesses, express new ideas, learn new concepts, and advance our health and quality of life. He's very careful to point to what he sees as the threats of regulation and a clearinghouse, if you will. Centralization, he says, that he's personally more worried about than any of the specific risks that others are talking about. The idea of a clearinghouse in Washington becoming the arbiter of AI models. Not gonna work, he says. Distribute widely and unleash open source AI. Now, on the other side of this are largely Democratic lawmakers, beginning with Bernie Sanders, out with a letter to Mark Zuckerberg, along with Sam Altman and Dario Amodei. He sees this very differently. In the interest of humanity, Sanders writes, stand by your words, pause AI development. It is not too late to avoid disaster. Stop building machines humans cannot control. He goes on to say, let me be very clear. If you do not take appropriate action now, my colleagues and I in the U.S. Senate will. There's also a letter that I just talked to Susan Del Bene about from House Democrats. A group of them signing off on a letter to Speaker Mike Johnson, saying Congress has so far completely failed to respond to the threats posed by AI development, and they are calling on the CEOs of the big AI developers to come to Washington to testify, referring to the recent incidents that OpenAI and Anthropic have talked about, where we saw AI models hack other computer systems without direction. Hugging Face, the most recent one. Calling these incidents serious, cautioning they may be the canary in the coal mine, warning of much more serious problems if these models continue to advance without regulation. But this is Washington right now, where we can't even pass a budget. And you've got a White House that is, of course, very gung-ho about AI and, in fact, investing in its future. So the political side of this remains gray at best, and our political panel is with us to talk about it. Bloomberg Politics contributors Rick Davis and Jeannie Chanzano join us on this Monday edition. Jeannie is our Democratic analyst and democracy visiting fellow at Harvard Kennedy School's Ash Center. Rick is our Republican strategist and partner at Stoneport Capital. What's your thought on this, Rick, as someone who works with a lot of corporate leaders and, of course, politics? Will Washington get its arms around regulation, a la Bernie Sanders and these House Democrats? Or is it more important for Mark Zuckerberg to have the ear of the president as he does? Remember, he was in the front row at that UFC fight on the South Lawn, and we know that they talk. Which is the most powerful force?
Well, I would say today, in the construct of what you just asked, it's Donald Trump. He controls the House and the Senate. He controls the White House. And by and large, he has a very compliant Supreme Court. So one man can really direct in the fire.
Just watching stocks at the moment. Taking a break. I'm going to make some lunch, and I'll be back in about 5 minutes.
And there's been activity, certainly in the blue states, to try and find state regulation. But I would remind everybody that it's the AI developers themselves who have been calling for government regulation for some time to create, some of the standards with which they need to be able to manage a incredibly growing, fast-paced market. It's unusual, this latest Zuckerberg initiative with the open source, that he would separate himself from some of the dialogue that the other AI developers have had. So typically, when an industry expands this fast, you depend upon the industry for a certain level of self-regulation. And if you don't get that, then the government steps in. I think we're finding more and more that that's where we are.
GCL. Jeannie, I know you heard our conversation with Susan Del Bene. Democrats are not a monolith on this, but progressives do appear to be. Will they get AI CEOs to come testify?
I think it depends on who takes the House in the fall. They may, although, Jensen Huang, invited by Senator Warren, did not appear. There is concern, and I think rightly so, looking at some of our leading educational institutions who sent their presidents as to what could occur when you go to testify. But Joe, while you were talking to Representative Del Bene, I went on AI and I asked it, how many jobs are being lost globally as a result of AI? And it gave me a number, 85 million to 300 million. It brought me to Goldman Sachs. It says 300 million full-time jobs lost globally. And I could go on and on, but I will save you that. The point is that these are very, very real concerns that Senator Sanders and that the Democrats in the House are raising, and many Republicans as well, because I'm not the only one who can jump on OpenAI and try to see these things. We simply don't know the impact
on all of our lives. And of course, job displacement is just one impact. And that's why we do need a conversation at the very least, as the representative told you. And we do need a serious conversation. The problem is that we have a Congress that can't even, to your point, pass a budget. So I don't know how serious a conversation is going to get on AI. But this is why so many people are responding to the talk of moratoriums and all else, because this is impacting our lives, our communities in almost every single way. It's a visceral reaction people are having. There's rightly concern and fear and little education. And by the way, Mark Zuckerberg cut 10% of his employees as a result of AI in just the last year. That was not something he discussed in this very long missive. So that is a concern, not just our competition with China.
Year of efficiency. Rick, would it behoove Altman, Amadei, Zuckerberg at the top of this letter to actually come appear before a congressional committee and testify? Isn't it in their best interest, to Jeannie's point, to educate people and not lose half the country at this critical moment?
Yeah, I think that educating the country and even educating the members of Congress doesn't necessarily require you to come up to Capitol Hill and sit through a hearing. We all know what these hearings are, right? It's 5 minutes for the member to demagogue the issue, and then a couple of minutes by whoever's testifying to try and defend themselves, even though they really don't care about what the answer is. And I don't mean to be so sarcastic about it, but that's what it's become. And Judy pointed to the hearings with the presidents of the universities, which I think the tunnel actually may sorely deserve. But at the end of the day, it's become a performative art form in Washington to hold hearings on things like this. What we need is real action on the part of Republican leadership and Democratic leadership to come together, making it nonpartisan in an effort to try and be prepared for the change that is coming. When you read and listen to Eric Schmidt about the oncoming super intelligence and the profound changes that will happen worldwide, it doesn't just have to be about jobs. You're going to have to be ready for it. And the one thing he points out is Congress, the White House, nobody is really prepared for it.
Wait, Jeannie, I just wonder how this became such a partisan issue. And I wonder if it would be if the administration had not aligned itself so quickly and in such full-throated manner with AI executives, with the companies actually taking stake in a chip maker in Intel for the betterment of the industry, showing up with Sam Altman, remember, to announce the data center project. That was very early on in this administration. And of course, we've seen the president invested in stocks like NVIDIA, where he's made a lot of money like a lot of Americans have. But if this was a different White House, would this be a D versus R issue, or is the Democratic value set simply one that would run counter to the idea of data centers and billionaires enriching themselves with AI?
No, I think this is truly bipartisan. I mean, you look at the governor of Texas, he's been talking about this. Many Republicans, whether they are in Congress or at the state level or voters, are very concerned about this because I mentioned job loss, but to Rick's point, it's not just job loss. It's these AI systems going rogue. It's bioweapons creation. It's safety issues. Let's not forget, Jeff Bezos' Amazon warehouses are the most automated in the world, many people say, and 3 times more likely you are as a worker to get injured there than you are in less automated systems. These are very real concerns on top of job loss. And Joe, let's not forget, what about pension loss? There's a lot of people who believe this is a bubble. We're at an investment of 1.4 trillion in these things. They're making about 50 billion now. That's not going to be a money winner. So are we going to see a bubble and then we lose both our jobs and our pension? These are real concerns and they don't just impact Democrats.
Somebody cue the robot anchor. I've got a missing seat over here. Jeannie and Rick, thank you so much for our great panel with Bloomberg Politics contributors Rick Davis and Jeannie Shamzana. We turn back to the war with Iran and the oil markets next, only here.
All around us, millions of things are hardened. A network of hardware and software Systems and sensors, products and technologies, working seamlessly together behind the scenes. You may not always see the result, but you feel it every day. At the heart of it, Honeywell Technologies. The first day of college is a major milestone. It's the result of years of hard work and smart financial planning. Financial institutions make a difference by supporting their clients when it matters most. Today, that responsibility is becoming more complex. Clients expect financial firms to provide online banking, investment apps, and digital advisory services that are secure and easy to use. 80% of financial advisors use AI in their work, striking a balance between technology and the human touch. But all of these solutions need the right infrastructure. AT&T Business delivers the secure and reliable connectivity these financial institutions depend on to move data and enable decisions in near real time to help families plan for what's next. Because in a world of high expectations, the question isn't just what are your clients investing for? It's also how you'll help them get there.
Some see heroes, others only egos. We see the era of billionaire athletes. Others follow the noise. We follow the money.
Bro, what do you do for fun when you're on break? I usually just play some games. Playing games? Man, come on, what's so fun about that? Well, I actually won $500 in my game earlier. It was in a slots game. I won before too, but they never let you cash out. Man, you must have played a fake one. I just cashed out $500 in my bank account yesterday. Yo, why did you stop talking? I just won another $800. What game is it? Tell me. This game is called ATH, and it's free to download. Go try it now. See that. In 10 minutes, you have a chance to win big. No hacks, no tricks. Every time you win, you can cash out straight to your bank account. Just log in and claim your free bonus.
Are you ready to level up? At the University of Arizona Global Campus, earn college credit for life and work experience you can get only in the real world. Explore over 50 online programs for working adults who never settle. Visit uhec.edu.
What? That game for me. And look, I was trying out all these different games, and I get a real jackpot and was real. Yeah, I told you it was legit. You finally came around. Why didn't you tell me about it sooner? I looked really remote and I was wrong. Yes, it's incredible. Luck. Let him down.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. The Dow, the S&P, NASDAQ, all in the red. Oil is advancing, but the S&P right now retreating from Friday's record, down 5 points, a little change, down under 0.1%, 77.54 right now on the S&P. Dow Industrials down 148 for the Dow, a decline there of 0.3%. Nasdaq down 95 for the Nasdaq Composite Index down 0.4%. The Bloomberg Max 7 Index trading lower by 0.2%. All of this with the stocks now down by 2%. Philadelphia Semiconductor Stock Index, the VIX, Wall Street Spear Gauge holding just above 15. The 2-year 4.23% with the 10-year 4.69% and the 30-year 5.24%. We've got gold spot gold up $21 the ounce now to $43.62. That is a gain of 0.5%. I mentioned the move in crude, WTI, 81.77 a barrel, 4.6%. Barrel of Brent, 87.33. Brent crude up by 4.5%. Intel says it will begin offering $15 billion in common stock, taking advantage of renewed interest in its business prospects during the AI data center boom. Intel says the money will be used for general corporate purposes. Today, we are seeing Intel shares slump by 3.3%. Microsoft, meanwhile, higher by 1.6%. Microsoft says it's planning to significantly increase production of its next generation AI chips, and according to the information. Recapping, S&P 500 index trading down by 5 points, down under 0.1%. For on-demand news, 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Charlie Pellet. That is our Bloomberg Business Flash.
Charlie Pellet live from New York. Thank you, sir. He'll be back coming up at the top of the hour, 2 p.m. Eastern, as we kick off Bloomberg Business Week daily, following the Monday trade here after the best week for stocks since April. Of course, oil prices pushing higher, part of the issue today, and keeping a cap, or a cap, I should say, on some of the enthusiasm with gains of more than 4% for both WTI and Brent. West Texas Intermediate's approaching $82 a barrel now, and Brent has topped $87. As the president's posture on Iran changes, what a difference a week has made in the evolution of both rhetoric and action. It was 1 week ago today the president was just climbing down from his threats to obliterate the country at the request of neighbors in the Middle East. Now he says we are only semi-negotiating with Iran. Remember, a week ago he had said we were on the verge of a breakthrough, 1 to 2 days away from a deal. We are low-keying it, is the quote from the president in an interview with Axios. We are just watching Iran with its huge inflation and the fact that they have no money. It's reported by Bloomberg. White House now signaling it is prepared to let economic pressure build on Iran for an undetermined period of time rather than launch fresh military attacks. Now, that has brought a little bit of a bid to oil prices because we don't know how long this could be, weeks, months, maybe longer, is effectively the new normal, waiting for the squeeze to hurt Iran that much more. Before our conversation with Professor Bernard Haeckel from Princeton University, we bring in Mike McGlone, Bloomberg Intelligence Senior Commodity Strategist, with his take on this most recent posture and what it might mean for oil and gas markets going forward. Mike, it's great to have you back on Balance of Power, as always. We're back in the 80s here today. The gallon of gas is at $4. Could this be the new sort of neutral position as we wait for this standoff to develop further?
If it is, then Republicans will have a big hurt probably in the midterm elections. Right now, as you mentioned, we don't know how long this is going to take, but the big squeeze is really obviously happening in Europe. Like European gas oil right now, it's considered diesel. It's near its the highest level ever. So they're really getting squeezed, which still mean to be curtailed demand. But you really see the juxtaposition in the U.S. Number one measure of heat, electricity, U.S. natural gas, that January contract, which will be front month, right before before midterms, has dropped 15% on the year. It's not even pricing for a whole. So we have a surplus of gas. We're creating increasing surpluses of crude oil, liquid fuels, yet we're exporting it. Something like that might change before midterms because desperation might be kicking in for our leaders.
Fascinating. If we stopped exporting, Mike, what would be the impact on prices?
it would be very discombobulating because a lot of this is flowing around. We're finding out there's a surplus of crude oil liquid fuels in this in the U.S., but not the refined products like diesel, as you mentioned. Diesel's $5.30. That's near an all-time high. Gasoline's around $4. It's not so bad, but it's the rest of the world that have a problem. The key thing, though, is my theme all along is we'll get prices lower by midterms. We have 3.5 months left. What you heard today is kind of dicey. I don't know how long that can last. But what I'm seeing is those growing surpluses in the U.S. One good example is U.S. natural gas is about 6% above an average storage this time of year. We have ample supply for winter already. It's only October. Yeah.
Yeah, well, you mentioned diesel. We're at 5.29 here. Gasoline's $4 even. If crude keeps in this area, do they keep rising?
Generally, so the cracks are so wide, generally they'll narrow, particularly as we get past post-driving season in natural gas. But diesel has a little more of a heating demand for winter, but I point out natural gas has already done it. It's already dropped a lot. It's not pricing for a cold and warm winter. So this is really the U.S. versus the rest of the world in the war and in prices. And it just shows our surplus of supply, which is going to only increase as we stay above cost of production.
Mike, thank you, as always, getting us started on the Monday edition with us live from Miami. Mike McGlone at Bloomberg Intelligence. Energy shares are doing well today. Valero, if you keep tabs on refiners, up over 5%. Exxon and Chevron over 4% each. The XLE is up 4%. OMH up 5%, following the commodity higher. But as you've seen recently, that can change day to day, and we'll see where we're at tomorrow with the impact on interest rates. Of course, very important. When oil starts rising, so too do interest rates. The 30-year at 5.24 today, up 4 ticks. The 10-year is at 4.7 now, up 0.6%. As we consider the politics at hand, the president has not been speaking so much over the past couple of days, but he has been posting quite a bit. Just a couple of moments ago on Truth Social, with respect to the Iran negotiations, he writes, Iran should be responsible for the damages and death caused to the people of Lebanon, Syria, Yemen, and Gaza. And that follows a post earlier, just in the last couple of hours, in which he points to Iran asking for compensation, he says, for the damage done to them during the last 5-month military conflict, even though it was never mentioned in any of our negotiations or meetings. He says it's an interesting idea because now we are going to do the same. Demanding in negotiations compensation from Iran for all the people, he says, that have killed and gravely wounded with their roadside bombs in many conflicts for which they are famous. All this coming after his interview with Axios, in which he referred to the fact that we're semi-negotiating with Iran. Quote, we are low-keying it, unquote, and that we are waiting for economic pressure to build rather than pursue further military strikes. Bernard Hagel is steeped in the culture and politics of the Middle East, and I'm delighted he can join us at this moment. Princeton University professor of Near Eastern Studies. Professor Hagel, it's great to have you. When the regime in Tehran hears something like, we are low-keying it, how does it interpret language like that?
I mean, frankly, I think that they think President Trump is all over the place and says too many things, and that he is not a good negotiator. Historically, the Iranians are famous for being amazing negotiators, and I think they're ratcheting up the pressure on him by making these huge demands over and above the deal that they say they're almost finalized with Oman on the strait, on passage to the strait, asking for reparations, asking for full withdrawal of U.S. troops from the region. Making just massive demands of
We may have lost our professor here. We'll try to reconnect with Professor Hagel as we consider what the president has said already. Quote, we are just watching Iran with its huge inflation and the fact that they have no money, unquote. Saying that the U.S. naval blockade of the country was deepening the financial pressure. And of course, we know as long as that blockade is there, it's much more difficult for Iran to make money. They cannot start getting oil out of the country by train or pipeline very effectively. They need to keep the strait. That's why they're talking to Oman about creating this new order in which there are multiple lanes of travel through the strait. A negotiation that has not involved the U.S. And when you also think about the level of munitions that our country, has been managing, it also makes one wonder what the next moves might be, or maybe justify this last one by the president. As the Deputy Defense Secretary Steve Feinberg wrote to the major defense contractors, they had no more than 21 days to submit plans to drive significantly faster, more aggressive delivery schedules. That's from a memo obtained by the Washington Post. And as we reconnect with Professor Hakel, I wonder, Professor, if you can finish your thought there. And let me add the question. We hear a lot about 47 years. How many of those 47 years was Iran preparing for this moment?
Okay, so I apologize for the earlier. I'm in the Middle East. I'm in a bad zone when it comes to the internet. I mean, as I was saying, the Iranians are trying to wrap the president, and I think they're doing a pretty good job of doing that. And you know, he has to be much cooler in dealing with them. As far as the Iranians in preparing for this, they have been. They're a revolutionary regime. They've been trying to spread their ideology all over the Middle East, and they were trying to build a nuclear weapon. They thought that a nuclear weapon was really the way to create deterrence and to protect their regime and its survival. They've discovered that actually controlling armies is much more effective.
It's an interesting way of putting it here, that this waterway is more powerful in influencing the United States than the threat of a nuclear weapon. That said, why would Iran ever give this up? Why would it ever make a deal with the United States?
I think it also wants to sell oil, so it wants to find some sort of agreement on the reopening of Hormuz. But what it wants to do is toll it. I mean, it wants to generate revenue, and it wants to dominate and control its neighbors, and countries like Saudi Arabia, Kuwait, and so on. And this is one possible outcome of this war that has to be absolutely stopped. I mean, the Iranians cannot control this region completely because they would have literally the entire world over a barrel. They would be able to control the global economy through oil and gas.
The world over a barrel. Someone's got to write that headline. Professor Benjamin Netanyahu has rejected the plan for Hamas to demilitarize, to disarm, and have Israel withdraw from Gaza. Could there ever be a deal with Iran without this component of peace between Israel and Lebanon?
Well, the Iranians want to actually bring in as many other theaters of war into this deal. They're trying to include Lebanon. They're trying to include Israel and Gaza. They're trying to include Yemen and Bab el-Mandeb, which is another theater of operation that may heat up very soon, and that would block the passage of oil and other ships through the Red Sea. So the Iranians want to do this, and they have to be denied this. These are separate theaters of operation, especially in Lebanon, where they control the country through a militia. One of these proxy militias that they've developed, and they have them in Iraq, in Lebanon, in Yemen, and amongst the Palestinians. I think what Netanyahu is trying to do is also try to tell President Trump, but mainly for electoral reasons, because he's up for elections later this fall, and Benjamin Netanyahu, the Prime Minister of Israel, and he doesn't want to, basically concede anything to Hamas, because if he does, he looks weak, and that's not good for electoral support.
Yeah, right. So what's the phase that we're entering here, Professor? As the president refers to, we're low-keying negotiations. Do we just turn like this for weeks or months at a time?
It's possible. No war, no peace. And, everyone at the beginning of this war was predicting barrel of oil at 150 to 200 because of the nature of destruction that Hormuz represented. It turns out that didn't happen, partly because the U.S. is such a major producer now, also because the Saudis and the Emiratis were able to ship some of their oil through their pipelines away from Hormuz, away from the Persian Gulf, and also because the Chinese played a big role in decreasing their demand for imports. So all of that combination led to a spike not happening. Now, the big question, I think, is going into the end of the summer and into the fall, if this continues, will we see a spike? Or will, U.S. production and Chinese behavior and the
these questions. Bernard Hagel is the Princeton University professor of Near Eastern Studies, and we appreciate your time here on Bloomberg TV and radio. Watching Wall Street, we're slightly negative. The S&P 500 is down 7 points, coming off last week's nice 3.5% bounce. Oil persistently higher. WTI and Brent up more than 4.5%.
We're watching the New York FANG components. Maybe we'll get a bid there.
There's only
Data dog starting to come back down now.
see the There's follow the noise. We follow the money.
Equity indices built on opinions. That's the old way. The new is Bloomberg Equity Indices, built using transparent, rules-based methodologies that are more responsive to changes in the markets, powered by 450 billion daily data points, and backed by research from hundreds of global experts, delivering benchmarks driven by the markets, not opinions. Bloomberg Equity Indices. Get involved.
All right, data dog starting to show some profit taking. Data dog profit taking.
Not enough people are talking about this, but I want to change that. In the next 25 years, one invention saved 40 million lives. Of course, I'm talking about vaccines. Most people have no idea this happened. Not because they weren't paying attention, because that number is genuinely hard. Thanks to vaccines, are reducing the risk from some of the world's deadliest diseases. Smallpox has been eradicated, polio is close, and cases of measles and tetanus have been cut in half.
Data dog turning.
But there's no headline. Progress is quiet like that. This is what progress looks like.
Get ready with me, credit card edition. First, I hit up Experian. They match me with new cards based on my FICO score. Cashback, travel rewards, balance transfer. That's great. I got the card I want. Get the app from your big
Netflix, looking for Netflix to continue. Push through the 50-day moving average. This week would be nice. The blue line is the 50-day.
So I wanted a new credit card, not a hit to my credit. Good thing Experian has no dating decline. They match me with cards that won't ding my credit if I don't get approved. So I got the card that I wanted and didn't work. Get the app from your big financial friend. Experian.
Hi, my name is Ron. This is my wife, Vicky. We're sending in a new remodel showroom at Sunset Mobile Beach.
We're a veteran-owned company and we Business Week Daily, reporting from the magazine that helps global leaders stay ahead with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Nasser and Tim
All right, S&P is starting to bounce. S&P.
and Bloomberg Originals.
Got a, it looks like an ABCD pattern on Netflix at the moment. Opening range breakout. That's A up there.
Happy to be here.
Markets wise,
Okay, Netflix looking for a push higher. New York Fangs are all kind of mixed right now. Apple looks like it's trying to turn the corner. Apple, at the less than stellar start to the week, we were above the 50-day last week.
Companies, publicly traded companies, get a great deal of CEOs.
We do have quite a few coming through. One of them that I want to call out, the CEO of Grindr, is back with us just days after the company upped its forecast for revenue and adjusted EBITDA. And then separate to that, we have U.S. antimony's Gary Evans stopping by
What is that here?
just after his visit to the White House on Friday.
Looking forward to that conversation a little later this hour. It is back down right here at Bloomberg Business Week. First up, a check of the day's trade about this.
Thank you very much. Tomorrow, Tim, we've got the Dow, the S&P, NASDAQ. We're all trading low. Back to work Monday. S&P 500 index will change. Perhaps the key takeaway, holding very close to a record, but we are looking at a decline right now. If we do turn around, if there is an advance, any move higher today will be a record on the S&P. Here's where we stand now. We're at 77.51 on that index, down now by 6 points. A drop there of under 0.1%. Dow Industrial is down 130 on the Dow, a decline there of 0.2%. NASDAQ Composite Index down 0.4%. The NASDAQ 100 Index down 0.3%.
Let's look at hedge flows. Right now, they're just kind of just sitting here, a gradual slip to the downside, hedge flows, but cyclical. You can see they're up and down, up and down. We're right above this volume by price, this net open interest level at 77.50.
81.94 barrel up 4.8%. Keeps advancing. We will have more.
Gold is up again today. Gold.
In the meantime, we're at the global benchmark 87.53 now, up by about 4.8%. Sources tell Bloomberg a group of U.S. investment giants are nearing a
Gold futures continues.
$1 billion in funding for the build-out of AI infrastructure. Those sources say Apollo Global Management, Blackstone, BlackRock, Brookfield Asset Management, Goldman Sachs, KKR are among the firms involved with NVIDIA on this investment. A formal announcement could come today. NVIDIA shares right now they're down by 2.5%. For on-demand news, 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. Tim and Nora, that is a Bloomberg Business.
Hey, thanks for that update, Charlie. Our Bloomberg economics came out this morning, writing that the surprisingly weak July GDP report September futures, though, indicated that it could still be take up market policymaker discourse over the next year. That the Fed is going to make it's really split right now. There are a couple different camps. One believes the central bank needs to assert its commitment to price stability by hiking in September, particularly to recover some of Kevin Warsh's inflation fighting credibility. Another camp thinks the price gains are on the way down, and the Fed is correct to stay the current course. From all, we're joined by Michael McKee's Bloomberg TV and Radio International.
Was looking for that on the street, and then we saw 50,000 jobs drop in the local government sector, education, and a lot of people saying, well, that's what happens.
Netflix trying to push a bit higher here. Netflix.
The question is there something really concerning here about this report?
Great to see you, Jared. And despite
Netflix met with the 50-day moving average and got rejected.
You just showed on the screen, and that really signals that it's a supply situation that's weighing down.
Breaking the downtrend though, Netflix looks good over the next few weeks. We should see more progress. Netflix swing trade candidate. Don't buy the high of the day. Buy the dips. Looks good though.
However, I do think that the consumer can remain strong with that subdued level of joblessness, alongside strong capital markets and decent wage growth. Also, when we look at the economy overall,
S&P 500, it's just a doji. Not quite an inside day. That upper, we took out Friday's high. 50-day, 21-day bouncing off the 50-day and pushing higher. 200-day, 50-day down below. The more important part is that XII, NYSE are all making new highs. Let's see what the industrials look like. Industrials,
interest rates will be down significantly.
INDU, industrials. Okay, those are okay. New York Stock Exchange.
Interest rates are really moving into a restricted.
New York Stock Exchange trending.
That usually drives yields a lot lower. Finally, we saw
The ARC Institutional Index. Institutions. All right, we're getting a blue elder stick now. So this could be a double top for now.
Some of those points on jobs and inflation, but let's talk about the Fed now because we have a new Fed regime, and in the older ones, we used to be able to look at the reports and kind of tease out, okay, the Fed's going to see it this way, and maybe I should be playing the market this way. That is not how Kevin Warsh likes to play this game. So he's not big on a lot of disclosure here, on a lot of verbosity. So how do you think these reports are being seen by Warsh, and is there any way to figure out which way the Fed leans into?
Yeah, I think definitely the Fed is going to be less restrictive here because even if you have contracted jobs due to a supply and demand situation, that still makes the expansion weaker, and it does lift the risks for monetary policy officials to focus too much on the price side of its mandate. We know that Chair Warsh came in with a unwavering commitment to bring inflation back down to 2%.
Oracle fading from what looked like it was going to be a break higher. We are above Friday's high, just a little bit off the highs of the session right now. Oracle. Not much to see here. The S&P is just kind of chopping around.
Some issues in the labor market, I don't think they're significant. However, that does have to move the focus a little bit towards the employment side. Jared, the ADP report, strong wage growth, the challenger job cuts were also very strong positive for the employment picture. So I think that we're going to have a more balanced central bank, and the odds of a hike now in September down to around 35% or so. Now, fixed income watchers now pricing in the first Fed hike towards the end of the year.
Yeah, I want to circle back to the jobs market and some of those revisions because they were really nasty. You saw May revised down from 129,000 63,000, June from 57 to 20 combined. That's
All right, S&P is starting to get something going here. Hedge flows turning up a little bit. Okay, we got a higher low.
Response that we used to, but this is stall speed for the economy. So you're not particularly concerned about this, but at what point do you? What would be the trigger?
Looks like a little short covering.
Yeah, so if I start to see that contracting always becomes a consistent theme as we get ongoing reports in future months, then I think that the risks to the expansion start to increase. However, because it's driven by supply and not by demand situations, firms here essentially have to start using AI, have to start relying on existing workers more, maybe more hours, more efficiencies, more productivity. And I think that's where the answer is going to come for ongoing economic growth. The expansion is alive. A lot of it is being driven by AI capex, construction, data centers.
Kind of boring right now.
Facilities. And the consumer spending, still buoyant, being driven by these terrific capital markets. We have an aging population, so a lot of those folks, those heavy portfolios are doing well and more of an incentive to spend. And then those folks that aren't as capital market sensitive, they're doing well with the subdued joblessness. Over 7.4 million job openings out there. Lots of opportunities for Americans to go out there, find work, and make some good money.
Well, we got under a minute here, but I want to get your take on the markets overall because we can look at these and slice and dice things in a number of different ways. But through your economist lens here, how do you see the markets? And S&P 500 is on a high, but we've seen these pockets of weakness, especially in semiconductors.
The bulls have so many levers to pull, Jared. And I think the most surprising thing is when we saw the NASDAQ fall around 11% from its high. We saw the Dow Jones and Russell 2000 hang in there, even though the dollar was stronger and rates were heavier. And that really points to this broadening market and a lot of rotational possibilities for equity market participants. The economy is doing great. They have a lot of support from the president, from the fiscal authorities, to some extent from the monetary policy authorities. I
think. And that really bodes well for earnings growth. And everyone's talking about how earnings growth is over 20% year over year, Jared. And I think that's going to keep people in this.
Yeah, it's amazing that what happened in this earnings season. Okay, we gotta leave it there. Thank you so much for this. Great. And coming up, we're gonna take a look at what is next for SpaceX stock. You are watching Market Catalyst. With campus and RV, get freedom credits on every new RV. Plus, save 17.6% on service labor. And on July 18th, we're giving away another RV. Visit ClubTheThing.com/America250 today.
Strong and smaller has always been about showing up strongest and most confident themselves, whether that's big creative, big personality, or a big voice, especially as a black woman. I see so many women chasing fame, trying to strengthen from down instead of chasing versions of themselves that take up space. And on ladder, it's not out. And every day that we're in this camp, why be smaller versions of yourself when you could be a stronger one? I'm Dr. Robin Barrett, senior coach on that. Stronger, not
like all the symbols and the flaws and imperfections. I think everybody is a bikini body, so I think I'm really happy to say I started with myself. So it's really a journey, and I felt like super rushed into trying to love myself, love my body. People are gonna love you regardless.
just wear whatever you feel comfortable with.
RTGT.
I told you so.
Guys, my wife is literally so upset right now because she just got scammed by fake names. So here's what happened yesterday. I literally received $800 straight to my bank from playing Cider. She saw that and wanted to try it too. I literally told her, hey, not all games are safe. She ended up downloading this totally fake app and she couldn't even withdraw a single cent. So if you want the real deal where you can actually redeem, just download Cider.
Drift brings real sense to your drive. Premium fragrance. Sophisticated design. Drift. Not your average car.
I'm here at the scene of the crime and we can confirm the suspect in the house behind me has lied about their Candy Crush level.
If you're gonna brag, you better back it up. You've got 20,000 levels to beat. No Wi-Fi? No problem. Play anywhere, anytime, and let your progress to the top. Best of all, it's free to download. So just go for it and see how far you can really go. Download Candy Crush Saga today.
Oh, wait.
Wow.
I'll see you on this in less than a minute.
S&P, no follow through in this particular bounce.
ARTW.
Turning to SpaceX, the stock is navigating its first major test post-IPO after its initial insider lockup restriction. It expired last week, releasing over 900 million shares worth an estimated $100 billion into the market. So joining us now to help us break this down is Oppenheimer analyst Timothy Horan. And Timothy, it's great to have you here. And let's just talk about this unlock here, and I should maybe correct myself. It's not that they were dumped onto the market, it's that they have the potential to be, but we're seeing, I think, 1.5 billion have been unlocked so far. That's going up to about 5.5 billion by the end of the year. There, you can see in that chart. And Elon Musk has a bunch of those if you project a year out. And maybe he's not going to sell, but at what point does this become an overhang, or is the market simply going to look past it like it has already?
Well, we're looking at still less than 15% of the stock is the free float. And even within that 15%, most of these shareholders are very, very long-term shareholders. So it's an over $1.5 trillion market cap company. We're talking relatively small amounts, and this will work its way out, over time. It was obviously a big concern going into the end of last week. We kind of thought a lot of hedge funds were short the stock going into the unlock, and that the stock would probably rebound on it, and that's kind of what happened. But you have to recognize this is going to be a very, very volatile stock. We've never seen a stock this large with this much revenue growing, this rapidly in, so many different businesses.
Let's talk about SpaceX and their engine. So SpaceX is an AI company now. They said that in the front page of their prospectus, and they just spent.
All right, just more chop. No direction right now. Most stocks fading from the high. We got Intel's turning back up now. Intel's turning back up.
Well, we're facing what we think is a massive shortage of AI compute at the moment. We've seen AI use cases just really in the last 6 months go through the roof. If you look at AI agentic coding, it can make software programs 10, 20 times more productive. And so just this one segment of the market is up like a couple of thousand-fold in the last 12 months. And there's many, many, many other AI use cases that are hitting right now.
SpaceX trying to push through. Last week's high on Friday. Looking for higher highs and higher lows in the coming weeks.
Just astounding. The company and we believe that the shortage of AI is going to be very, very acute over the next couple of years. They have a great
60-minute 20 EMA. You should expect that occasionally this is going to pull back to the 20 EMA or 10 EMA on the 60-minute time frame. That's your opportunity to buy if you haven't already done so. As long as it doesn't lose the 20 EMA, that's your stop. Trailing stop should continue to move higher. There'll be the opposite of what we're seeing here on the left. SpaceX, if it does what we think it's going to do, it'll do what it did. It'll do what you're seeing on the screen. It'll follow the 9 and 21 day, the 10 and 20. Sorry, 10 and 20, and just keep going back up to these highs, most likely.
Expecting the next 4 years to get to free cash flow break even, but that'll get them on a track to get to basically $1 trillion in revenues in our model in about 6 years. 7 years, give or take. So it does take a lot of upfront, investment. But we've never seen a company ramp from 50 billion in revenue. They plan on being at 100 billion at the end of the year in terms of run rate business. And their goal is to be at $1 trillion, in 2030. And it all depends on the AI infrastructure. If they can indeed get basically payback for the compute that they buy in 1 year, then they should be able to hit their numbers, and our numbers frankly won't be a problem. But to your point, they're going to have to raise over $100 billion a year to fund this in the next 4 years. That's a huge, huge risk. It's not really clear where it's going to come from. But once again, the 1 year payback is critical. If they can do something like that, then they probably even get vendor financing from NVIDIA, project financing, or asset financing from others. But still,
Chop. The markets are just choppy right now.
That's actually making money, the kind of the money engine, and that is Starlink. And they've got these new V3 and the 3rd generation of these satellites going up. How important is Starlink to their capital, their balance sheet?
Well, up till recently, it was 2/3 of their revenue. It's a huge market opportunity. The communications industry globally is anywhere between $1.5 trillion and $2 trillion. They think they can pick up a huge amount of share. The one industry they're going after initially is the broadband market, where they have at this point, about 15 million subscribers globally. There are about 1 billion broadband subscribers globally. They think they can easily get to a few hundred million of the billion. That is gonna take CapEx. They're basically close to free cash flow break even right now in that business. And then they plan on entering the local market also. That could require more cash because they're gonna have
S&P pulling back more.
do that. But on the broadband,
AT&T trying to head back to the 200-day overhead. Verizon,
increase capacity like over 10
Verizon
100-fold in the next kind of decade.
pushing higher.
It kind of
T-Mobile,
subscribers in this. They're getting
okay.
over 60.
Palo Alto Networks, all of these,
They're entering the enterprise.
all of these security stocks look like they're pulling back a little bit intraday. Just some profit taking after a really nice run higher today. CrowdStrike and Datadog. Okay, Datadog fading a little bit. Looking for a bounce. Palantir pulling back a little bit. Microsoft. Okay, these look a lot worse on a short time frame than they really are. Microsoft.
So there's a lot of
All right, we gotta leave it there. Thank you.
All right, Tesla's starting to move a bit. Tesla coming off the low.
Tickers, we're watching Market Catalyst.
Okay, just chop. The markets are not doing anything. Just chopping around. Okay, I'm going to take about a 5-minute break. The markets are not going anywhere. I'll be listening to the stream. Just going to take a 5-minute break.
There's free right there. Berkshire Hathaway is starting to spend on its cash pile as the conglomerate bought more stock than it sold for the first time in the last 3 years. This comes as new CEO Greg Abel charts the future for Berkshire after Warren Buffett's retirement. Jake Conley has been following all of this. And Jake, that cash pile is up to $400 billion. And it looks like, the new guy's kind of maybe flexing a little bit. Like, is it the beginning of a big purchase here? What's on the you be my punchline a little bit. Bought more stocks than it sold for the first time in 3 years. And that's both, it's repurchasing shares as part of that cash spend, also buying stocks, putting some numbers on that. The company bought $23.5 billion in equity securities during the second quarter, sold only $3.7 billion in the same period. Now, we don't know exactly what was bought, so we won't get that until a different report. The 13th this month, yes, right. We won't get that until later. Some other good stuff in the report. Quarterly profit more than doubling, and then ending June with $367.4 billion in cash and treasury bills. Marks a 4% decrease from the previous quarter, the first sequential drop in 4 years. To your point, the immediate question I'm asking, that I think the street is asking, is Greg Abel going to be a little more of a maverick, even if measured, than Buffett's longtime 50 years of buy and hold? Now, we've seen Buffett come out and say, look, part of this big buy was $10 billion in investment in Alphabet. That was part of a private placement to help Alphabet fund its AI infrastructure. Surprisingly, Buffett came out, told CNBC's Becky Quick, I made that investment. I directed that. I initiated that. And this comes after he stepped down as CEO in May. He remains chairman, but Greg Abel is taking over as CEO. So the question it sets up for investors is, well, who's really driving the boat here? I think that's a great question because historically, Warren Buffett has an incredible Rolodex. And I remember the global financial crisis. This blew my mind. Warren Buffett single-handedly almost talked up the entire market. He invested a bunch of money, billions of dollars in Goldman Sachs. And so I think that's a really good point because we're talking about whittling this cash pile down, but then Buffett's still calling the shots. And one of the biggest deals in a long time, is able to be able to separate from it. And I'll tell you something interesting. So Buffett tells CNBC's Becky Quick in a recent interview. He says, quote, I'm not doing anything he doesn't approve of. Talking about Abel. He is not doing anything I don't approve of. We talk all the time. But Abel, is the decider. But then we see Buffett directing one of the biggest investments Berkshire has made in recent years. So another thing it made me think of, back in January, CNBC aired a 2-hour special with Buffett. Again, CNBC's Becky Quick doing a long-form interview with Buffett, kind of talking life and legacy. And one of the things they really zeroed in on was Buffett's belief that AI is the biggest threat to humanity that he's seen since the nuclear arms race when he was younger, comparing the threat level to that of nuclear bombs. And so the question that asks for me is, if you believe that, do you still invest in it? And it looks like, given the Alphabet investment, yes, it looks like Buffett has put aside those concerns and is still saying, look, Berkshire Hathaway's in this game. Maybe Abel's going to spend a little more, free up some of that cash, put it in the equity market. But it looks like with the Alphabet sale, they're leaning in. My biggest concern would be if Warren Buffett, God forbid, he actually does pass and then does the Rolodex. What happens with the Rolodex? That falls in Abel's hands, but are they going to return his calls? So you might be the long-time second in command, but you're not Buffett. And that's going to, Abel's a smart guy, sure, but that's going to hang over him for a while. And he's got to prove to the street, not only am I a capable leader, I can pick up the phone, I can make just as good deals as he can. You know what solves that problem? A $300 billion deal tomorrow. That is us. Oh, that is us. Deploy that capital. Throw it all into a video. All right. Thank you so much, Shane. Thanks, Karen. And coming up, where Bitcoin fits in the long history of how Americans have built wealth, what it tells us about the future.
TOPP.
4 days old, the Great American RV Show presented by Campers Inn RV, August 13th through 16th at Myrtle Beach Mall next to Bass Pro Shops. Show pricing on grand design, drinking, and more. When it's over, it's over. 4 days, then we're done.
Strength isn't optional for me. Being able to carry my kids and give my best on stage, all while feeling confident in my body, is everything. Strength training gives me that, and ladder gives me the plan. With ladder, I get a daily plan from an expert coach who guides me through every workout, no matter what my insane schedule looks like. I know a lot of women are intimidated by strength training, but it's truly the secret to my results. I'm Hillary Duff, and I train on ladder.
Hitting jackpots, that's not even the best part. It's winning with your crew, live on My Prize. Spin hot slots, whip exclusive packs, double down on casino classics. Play with your favorite streamers like James Harden, Marlon Wayans. Sign up and claim up to 750,000 gold coins, plus 65 free sweeps cash. Play My Prize free, online or wherever you get your apps. Winning's better together.
With access to weight loss medication, everything changes in the best way possible. It's a huge breakthrough, really. That's MD Exam. They offer GLP-1 medication with personalized support for 80% less than name brands. No insurance required. They've helped thousands achieve their weight loss goals with a 93% success rate. And their 180-day weight loss guarantee will help you start your journey with confidence. The weight loss breakthrough you've been searching for is MD Exam.
All the way. Now, the zero missing. How did you calculate the stuff?
JBS Halton.
From Bitcoin to prediction markets, Americans are reshaping how they build wealth. I got the chance to sit down with Joseph Moore, historian, investor, and author of How to Get Rich in American History, and he argues that many of today's hottest financial debates are not new at all. Joseph, it's great to talk to you again here. You know, the last time we talked, I didn't have the benefit of having read your book, which I have here. I have now read it, at least parts of it. I didn't quite finish the whole thing, but I got to tell you, I was really interested in some of the parallels you draw between cryptocurrencies and the American currency, what we call the greenback, before it was invented in around the Civil War, like in times, because it was kind of a wild west. You had all kinds of competing currencies. So what do you think? What would you say to a Bitcoin holder? Would they recognize the way money worked way back in the day? Would they see the parallels that you can kind of go back in time? Well, I will tell you this, cryptocurrency looks a whole lot less like the future to me and a whole lot like the past, because we've seen a lot of this before. And I wrote an essay in Substack called Bitcoin is a Zeppelin, because Bitcoin is to money right now very similarly as Zeppelins were to air travel, which is to say, they were actually the first innovation that showed the future could happen. They were not the technology you actually wanted to use when you got there. Well, hydrogen, it kind of explodes. We saw the Hindenburg, excuse me. So was that FTX blood? Well, I'll tell you this. Not only did they have a bad habit of exploding the hydrogen bombs, but they also could be blown off course and these things. But we forget that for almost a quarter of a century before airplanes were clearly the way of the future, there were Zeppelins. There was the first airline was a Zeppelin airliner. It used to make regular flights across the Atlantic. There was even a route to the North Pole. And when H.G. Wells wrote his famous work, his follow-up book to that was War in the Air, in which the U.S. is invaded by Zeppelin and loses. So if I go back to that era and I tell people, will people fly? They said, well, of course. And I say, how will they do it? They will go by Zeppelin.
And then over time, the logic of the airplane won out over the first technology. My fear for Bitcoin holders is that they're hardly a zeppelin of the money future.
So is it stable coins? Because what blows my mind about stable coins is they rose out of the DeFi movement, right? And it was kind of like an alternative to government currency. But stable coins are now becoming intertwined with the global payments and treasury system, so that they're actually increasing demand for treasuries. And it's just a 180 for me. What's the history there?
The historical analogy right now to the future of crypto looks a whole lot like Eurodollars, which arose in the 1950s and 60s. By the way, this is a Nick Carter argument. I'm not some original me. But the idea here being that if you live outside the US, you do business outside of the US, but you live in often inflationary currencies, and you would really like to do business in US dollars. So your banks put dollars on their books to trade against. And that's what's happening. What happened for businesses in the 50s, 60s, and 70s that we just assume is normal today was new. And stable coins are going to look like that for the everyday retail consumer. So you'll have people who can quickly trade in what is a de facto US dollar. And ironically, this entire movement that started with Bitcoin fighting against the authority of a fiat US currency is going to end up supporting it because you have to buy all those treasuries to support all those dollar-backed coins.
Okay, so the thing is, if I buy a stable coin today, under the best of circumstances, it's going to retain its value. This isn't something that you speculate on.
Right.
So does your logic apply to, I mean, is there anything besides stable coins in the crypto realm that I could invest in that has a chance of substantial appreciation?
Sure, it also has a substantial chance of going down. And I think that's, if you look back to the history of this, we have actually done so much of this before. People have largely forgotten this history. That by 1860, there were over 10,000 separate individual currencies floating around America.
How many cryptocurrencies today?
Thousands and thousands. And people could issue them. You could issue them back by anything. You could issue them, and I could issue them. People got paid at work in these kinds of currencies. And they got very used to realizing, sure, they can look value over up, but they have a high likelihood of going down. And so all the advice was different in the 1800s before the dollar. It was spend as fast as possible. Do not hold the bag. And many immigrants would come here not knowing those rules, and they'd be left holding worthless dollars. In the same way, a lot of naive crypto investors come to the market, hold something they think will go up.
Let's see the parallels. I want to read from page 37 of your book. The easiest places to catch speculitis, that's a form of wanting to speculate too much, were bucket shops, bars that posted up-to-date stock prices via the newly invented stock ticker. Those little devices that would spit out the stock prices. Stocks were too expensive for working people to buy, so patrons instead placed wagers on the prices going up or down. I tell you, that doesn't sound like prediction markets.
It sounds like a gilded age cow sheet, which was really what it was. I joke with people that they go in and they see what I call the chart, right? Somebody slides you, a financial advisor slides you. Here's what I invested in 1929, investing all dividends. Then it would have eventually made you worth $10 million by now. And my point is often people couldn't buy the index in 1929 or in 1919 or in the 1890s. So because you couldn't afford the index, you would have had to buy 100 shares of every stock in that index, $1 million back then, 12 to 20 today. What people did is they went to these bars and they gambled not on the actual stocks, they never bought the stock. They gambled the price movement. If it goes up, I win. If it goes down, I lose. And the house, as usual, and as with many of the online prediction, all of the online prediction markets today, it's still works.
We got very little time here, but I'll give it for one more. Anything else that pops in your mind that you want to say?
Yeah, well, especially when it comes to Bitcoin. I think though, as we look at the past to try to give any insight into the future, everybody gets excited to see the Goodyear blunt when it shows up at the game, but nobody showed up to the game riding on the Goodyear blunt. And my worry for Bitcoin enthusiasts is that they are forgetting that the technology that showed you the future is where in the future you end up using.
Joseph, it's been a pleasure talking to you once again. I enjoyed it as always. Coming up, we're looking at some key charts as investors assess the longevity of the latest market rally. You're watching Market Catalyst.
When your money is spread across multiple accounts, it's hard to see your full financial picture. You can count on Credit Karma to bring it all together. Because when you connect your accounts, you'll reveal ways to save more, improve spending habits, and pay down debt with extra funds.
connect. I'll show you how to grow your money. Into a credit card to get started.
Let me tell you a story. You see, the all-new Certa Perfect Sleeper with the Q4 support system has 4 in one perfectly interlinked coils that help relieve aches and back pain for perfect sleep night after night. No. Have you considered being a sheep detective?
The Sheep Detectives, rated PG, only on Prime.
Sort of. We make the world's best mattress.
If you can't hit the jackpot in 10 minutes in your slots game, just delete the app. Why don't you try Cider Casino? It's free to download and built for the pure thrill of the win. Enjoy a reliable professional platform and quickly claim your rewards whenever you're in. Just download and try it now. You have a chance to hit the jackpot in 10 minutes. No ads, no scams, no withdrawal limits. You can
Anywhere, anytime, and let your
All right, we got a little bit more than an hour and 13 minutes to go. I'm your host, Cousin Vinny, coming to you from theclosingprint.com.
download Candy Crush Saga today.
Markets are very choppy, hasn't gone anywhere. Since about 12:30, we've just been moving sideways. Looking for a bid. There goes Google. Google catching a bid right here. Google.
SCKT magazine was sent.
Netflix flagging, looking for a pop and a push higher. Netflix. S&P trying to turn up. Google on the move here.
May rest in 10 seconds.
Google, nice little pop, bouncing off the 50. All right, somebody just bought a bunch of shares of Google, looks like. Okay, Rocket Labs. We got earnings tonight, Rocket Labs.
SCKT may rest in 10 seconds.
Rocket Labs.
TOPP.
Investors are in stages for the markets after the S&P 500 closed at a record high yet again last week. So let's take a look at some clues in the data with Matt Seminara. He's a data research associate at Brickholtz Wealth Management. You might know him as Chart Kid Matt. And Matt, it's great to be with you here today. I've been a fan of your work for some time. I know you brought some charts, and we're going to get to those in a minute, but just give me your big picture overview of the market.
Absolutely. Thank you for having me here. Yeah, so right now, I guess big picture, this is an earnings-led bull market. Right now, we've got 29% year-over-year earnings growth for S&P 500 companies. Top line revenue is growing at 15% for Q2. And, it's hard to fake revenue growth. You can get crazy on the bottom line, but you can't get crazy on the top line.
God, this kid looks like he's 25.
Stock market right now.
Reminds me of my son.
All right, so I want to talk about earnings, and I have one of your charts here. We can show this on the Wi-Fi. So we have a scatter plot. Each one of these blue dots, and there's a bunch of them, and I know it looks like the Milky Way galaxy, represents 6 months. And so we have 2 axes here. You can go up and down, and that's S&P 500 performance. And then you have their 6-month S&P 500.
All right.
Each hand. just a forecast of is the stock getting more expensive or less expensive. So in the upper left here, this means that all these 6-month periods, you have S&P 500 performance positive, and you have the stocks getting cheaper. That's the lower PE. And right now, stocks, as you point out, are up 11.5% over 6 months. The valuation has shrunk 8.2%. And you do the math, that can only happen with incredible earnings growth. So kind of break this down for us.
Well, I think you did a great job breaking it down there. Yes, what we're looking at here is the historical relationship between the forward PE and the S&P 500 change over 6 months. So typically when you have multiple expansion or you know, stocks get more expensive, the stock market goes up. And when they get cheaper, the stock market goes down. Right now, the stock market's actually getting cheaper as the prices are going up. And so there's an adage on Wall Street that, oh, sorry.
No, I was just going to say, and this is very, very unusual to have. This is something that happens out of a recession or a market bottom, but we're at all-time highs. I do want to hear that adage you were just about to say.
Yes, there's an adage on Wall Street that it takes a lot of E to offset PE. And what that means is if I gave you the earnings figure for 2027 for the full year, it would be very difficult to predict where the stock market ends up. Because the P ratio, if it goes from 20 to 25, that's a big change. And here, what's happening is the PE is falling, and there's a lot of E that's making up for the fall in PE ratio. And so that's contributing to the stock market actually going higher over the past 6 months, despite the multiple contractions.
All right. Now, you raised another great adage that I'm going to quote you here on.
Let's see what Rocket Labs looks like.
Stock price reaction to company earnings. And a lot we've seen this
Okay.
over the last few weeks, even with big tech, where if you don't really
RKLB, Rocket Labs.
and if you beat them, you do really well.
Absolutely, yes. So
Got some big levels above 85 and 95.
The last thing as investors you want to see is when companies beat and stocks.
There's no negative gamma here, it looks like.
Stocks. And also, the companies that are missing earnings, they're getting hit. They're getting hit hard. And so the idea of a bull market is that the companies
Rocket Labs
are being rewarded.
selling call spreads.
They're being hammered down. Now, the great thing about indices and the great thing about the S&P 500.
Okay, what are they looking for?
The companies that are beating their earnings because their prices are going up. So it's a great thing for
Rocket Labs, they're looking for.
All right, we had another.
What was it we're looking for? Rocket Labs. Expected move.
Advanced decline versus performance. So what's called the advanced decline line or AD line, that's just a running total each day. How many stocks in the S&P 500 are going up minus those that are going down? And so you want to see that line go up over time, and especially
13%.
Of the S&P 500.
13%. So 20%. 20%. Rocket Labs 20% would be $16.
The S&P 500 peaked in what? March of 2000 versus the advanced decline line.
All right, so 100, 105 minus 16. Okay.
So what we had back in the tech bubble is we had a lot of stocks stop going up in 1998. And it's like more stocks started to fall and go up. And so that's called breadth deterioration. And so that happened around 2 years.
All right, so 60. I don't see it getting down to 60, do you?
Today, the entire
60, and we'll check out 660.
Tons of stocks going up. The
55.
You're seeing on the top pane here of this chart is continuing to hit all-time highs right now. As the S&P 500 price is also hitting all-time highs. And so
What if I go out 1 week?
They're contributing to the overall growth of the market, and it's exactly what you want to see if you're a bull in the market right now.
So that leads to the natural question: what would make you a bear? Like, what? Not only so, forget the 20% price decline, which is arbitrary anyway. But what are some of the canaries that you're looking for that might suggest to you, okay, we're finally topping out?
I think the first thing that you would want to see is good news failing to be good news. So what that means is you have companies that are beating earnings, they're raising their forecasts and their guidance, and the stock prices are performing negative.
60.
News. I think that would be an indicator. Additionally, I think seeing any deterioration in breadth, right now, the S&P 493, so exclude those massive Mag 7 names, the S&P 493 is actually outperforming the Magnificent 7 this year. And so if you
100.
start to see that reverse, and all of a sudden the
22 delta.
I think that could be an indicator that the rest of the market is starting to kind of go back, and we could see some deterioration in breadth that leads to a further decline.
Okay, I want to go to the Wi-Fi Interactive again. I'm going to show you my mega caps heat map going back 2 weeks, basically. That's 10 trading days. You can see a lot of green there. Some of these are earnings stories, SpaceX, 20%, Microsoft at 30%. And now I want to show you semiconductors. Here's the AI trade, and you're seeing a lot of dark green. On the top row, we got NVIDIA up 12% all the way up to ATH, which is up 32%. And these are the old AI, leaders, because this bull market was built on AI, and it looks like they're finally coming back. How stable is this? Because I know there are a lot of people underwater on semiconductors who would love to see those all-time highs again, but you got some space in between.
I think this is super bullish to see the recent laggards start to come back meaningfully. We had just last week, we had 88% of all of the semiconductor companies within the Russell 3000. So there's over 50. We had 88% in a bear market. And so sentiment on those names was completely washed. And what you're seeing now is a normalization back into some of those semi names. The fundamentals of those companies are tremendous. Their stock prices did take a short-term hit. That's just the sort of the narrative of this market just changes quick, and now we're seeing it snap back. And so you're seeing catch up in these names, and that's supporting equities continuing to hit new highs.
STKH.
All right. Well, Matt, we got to leave it there. Really appreciate you stopping by. It's been a pleasure.
Thank you so much, Jared. Appreciate having me.
And that is it for Market Catalyst. I'm Jared Woodbury. Thank you for watching.
All right, thinking about selling some calls, call credits on Rocket Labs 100, 105 for 2 weeks out, 3 weeks out, maybe. I don't know. Markets are starting to climb a bit into the close. We've got about an hour to go. Okay, let's look at S&P 500 starting to rally a little bit. Got us excited a few minutes ago, back at 1 o'clock or so. Looked like it was going to start to go more.
Hardworking South Carolinians voting for increasing the gas tax by 70% and a nearly $1 billion taxpayer-funded bailout, putting himself first, empowering work DEI liberals, starting South Carolina tax needs fraud for fixing presidential. Suspect responsible for the concept of this.
Why does my bra look like a potato sack? Honey, that's not support. That's just sad. Need everyday support? Meet the Honey Love Soft Form Bra. Get wire-free lift and zero back bulge. Magically soft on the inside and strong on the outside. Wide straps, no shoulder dents. Say goodbye to adjustment exhaustion.
Intel starting to turn back up again. Higher low. Need some higher highs now. Intel starting to turn up. It dipped. It dipped early. Then it ran up during the lunch hour. Dipped back down again. All right, so we're watching Intel. $15 billion worth of stock offered. About a 3% dilution. Not too bad. 50 days up here. Okay, looking for Intel to rally up. Okay, there goes Google. Google continuation. Apple turning off the low.
change fall to the upside.
THH.
Just took a little bit of data dog off. Apple rising. See if we can't get back above the 50-day this week. Apple. Not interested. Just leave it there. Thank you.
Building role-based speculation surrounding straight up from the technical NVIDIA falling. Is falling. Financial Times report the AI chip giant is working with Blackstone's data $500 billion AI infrastructure.
$500 billion. Wow.
Into the Fed's mindset, interest rates, the conversation. Schonberger, Federal Reserve Bank.
The reason about this is we've been in this side on the inflation. Right around. I don't think policy is restrictive, meaningfully restrictive at this point. When I look broadly across from the financial markets, when I'm talking to businesses, I'm not hearing that they're sensing any restraint from investments in growth based on where interest rates are. And so to me, that says that now is the time to act. The longer that we wait, the longer that we are missing on our inflation. The American public.
Apple coming off the low.
Said in a statement July 31st, I quote, the longer that high inflation persists, the more challenging and costly it will be. So how much tightening is needed here right now? Is it just one hike and wait, or do you see a gradual?
I welcome every meeting with an open mind to think about what the right stance of policy is going to be. We're going to have a lot of data between now and our next meeting. So prejudging. Is I'm not feeling that restraint. And with inflation having missed our objective for 5 years, it's really important that we're able to bring it back down to that 2% number. And so to me, we need to start the process. I think about it a little bit like when you're driving your car. When you see that stop sign coming, you can either slowly pump your brakes to glide into that stop sign, or if you're not paying attention, you have to jam on the brakes really fast to make sure that you hit it when you need to. My passengers usually prefer when I've got that gentle glide into it. And so I think that now is the time for us to start bringing more restraint.
But so it's at least 125 basis point rate. Could it be more than that? The market's pricing in 2 hikes at the short end.
I don't want to prejudge it. I don't know exactly where it will end. I would say in general, 125 basis point move probably doesn't do a whole lot for the economy. So it's probably, some number of movement. I don't want to prejudge what that is.
That's job for the month of July. And I'm curious how you view the labor market now in the context of achieving your dual mandate, if that's changed anything for you.
Well, I would view that most recent report as a mixed report. We did have negative payroll growth, negative 23,000 jobs. And so that's obviously very impactful for people who've lost their jobs. It was very difficult for their families to find their way and to try to make ends meet. On the other side, we had a headline unemployment rate that was 4.1%, actually dropped by 10 basis points from where it had been. And so together, when I look at, any one of those jobs numbers reports is very, right? They move around. They're very easy. And so I try to look at the average over some period of time. If you look over the last 3 months or the last 12 months, we've had job growth of about 20,000, 25,000. And so it's not a big number, but given some of the changes that we've had, both with demographics and inflation, that may be around the break-even number that we need to see. And I think that's what we're hearing from that unemployment rate at 4.1%. 4.1% to me is right around my estimate of full employment. And we've been pretty stable around that number for the past year. And so I'm still not seeing a problem. When I look at our mandate, I see inflation that's been missing for 5 years. We're at 3%, which is well above 2%. But we're at 4.1% on the labor market side. So again, I'm not seeing tension in the mandate. I'm squarely focused because we have this stability in the labor market that we can bring inflation back.
Well, let's dig into inflation a bit because to your point, if we look at the
All right, we're grinding a bit higher. Apple's still pushing.
expenditures index on 4 basis excluding volatile prices, 3.3% for June. If we look at another measure, the consumer price index, that was 2.6% for June. We're going to get a fresh reading on CPI on Wednesday. And the Cleveland Fed is actually pinned down expectations for 2.5% CPI, so that would be down 10%, and then a 0.2% month over month. If we were to get that print, that would mark 2 cooling months of inflation in a row on CPI. If we were to get a third month of that, would that ease your concerns on inflation? What would you need to see, if not that, to give you confidence that inflation is coming back down to 2%?
Well, certainly I would be very happy to see inflation prints that are coming in lower. Nothing would make me feel better than to be wrong that we need to change the stance of policy to help bring inflation back to target.
JP
But I just don't see it coming back. So when I'm looking at inflation, PCE inflation is our core objective. It's important that we have one that we hold ourselves accountable to, and so that 2% headline PCE is that number that we hold ourselves accountable to. But I look at a wide variety of metrics. So I look at CPI, I look at PPI, I look at the mix of all of these data. So I'll look at services, I'll look at core services ex housing, based core services. But I recognize that individuals are really experiencing headline inflation. That's what's affecting consumers in their pocketbooks and their wallets at the end of every day. And so it's important that I look across all these broader measures of inflation, but ultimately our objective that we should be held accountable to is that headline PCE.
And when you look at inflation right now, when you look at the complex picture, right, we've got the conflict in the Middle East that seems to be on and off again. Strait of Hormuz maybe a little bit more difficult than thought to reopen sustainably. You've got the potential for more tariffs. You have AI. When you look at this picture, what is it that you're most concerned about?
What I see is broad-based inflationary pressure. So yes, we've had a couple of these one-off shocks, whether it's from tariffs, from some of the energy issues.
All right, Oracle back, moving back up towards the highs. Apple's on the move. Apple, nice bid.
Business leader in Sandusky, who was telling me that their insurance prices have tripled over the past couple of years. I'm hearing about the AI build-out. I'm hearing about costs to get materials for that, and energy prices. So even for people who are unrelated to the AI,
Oracle
Shane was talking about
looks good. Oracle, Google,
significantly because of some of those pressures. And so to me, it's not
Apple turning the corner.
to these shocks that we see. It's a much more broad-based.
Chairman Warsh said during his press conference a couple of weeks ago, multiple times, that bond yields had moved higher than from the June policy meeting and suggested that that was a good thing, implying that perhaps that could translate to higher borrowing costs and translate to tighter policy through markets. Those comments, though, have sowed a bit of confusion in markets and led to a loss of confidence about whether the Fed has a credible strategy to bring inflation back down. What do you say to those concerns?
Okay, S&P still climbing here. S&P. All right, trying to get back above VWAP. We've got 50 minutes to go, 51 minutes to go. I'm your host, Cousin Vinny, coming to you from theclosingprint.com on a rather boring Monday. A lot of stocks faded from the morning highs. Dojis everywhere. Up down volume is 1-to-1, so we didn't expect a whole lot today. Going into the close, we have 224 stocks advancing on the S&P out of 500. about 46 out of the queue. So it pretty much tells you the same story. About the same amount of stocks advancing as declining, more or less.
We have to stand behind our words with our actions when appropriate. And so certainly I'm going to factor in how markets are performing, how they're interpreting what we're saying. But ultimately that's not a substitute for us taking action that's necessary.
To your point, Fed Chairman Warsh has repeatedly and fervently said that the central bank.
Okay, Data Dog turning back up again.
Fed officials and
Palantir's starting to turn up. Apple's turning up. Microsoft still fading.
So if inflation.
Snowflake's starting to turn up. Broadcom looking for the trend to continue. Broadcom is just a grinder higher. Okay, on the daily.
Fed credibility has been built.
We're above the 50-day.
It's built by
Looks good. Apple.
Intentions are, how we are going to go about our managing our job, how we're going to go about delivering on that commitment of 2% inflation. But that doesn't mean giving forward guidance. That means helping to explain the reaction function. It means telling the public how any new piece of data that comes in will impact our overall mosaic and will help inform our decision making. There's a large body of research that shows that when business owners and individuals understand the framework behind our decisions, they're able to make better decisions for themselves. And so that's really where I think the credibility comes in, is being transparent and clear about what our objective is. Our objective is to deliver that 2% inflation. And so we need to make sure that we are able to that. So again, that's why
Apple catching a bid.
Yeah, but there is confusion right now. Markets, that's the issue.
There's a lot of uncertainty out there. Generally, I think markets and the public can be uncertain about a number of different things that are going on. I don't think it's just about
Apple rising.
It doesn't relieve or increase the burden on the Fed to make sure that we're delivering on both sides.
Datadog is still number one on the NASDAQ and the S&P 500. It's held that spot all day as security stocks maintain a bid. Google's starting to see some profit taking now.
That has helped monetary policy outcomes and decisions by not telegraphing ahead of time.
Preserving flexibility is smart for any system. I think there was a moment when we were at the zero lower bound where using forward guidance was an effective tool to help put more accommodation into the economy. Now, I think we need maximum flexibility given the uncertainty. And one of the things that I do love is, to the family fights, is that you've got 19 different people on the FOMC who come from all different walks of life, all different perspectives. And so we're really able to have a thorough, deep discussion. And I learned the most really from some of the people who grew up in different environments, some of the academics, and that's not my background. It's really helpful to hear that.
There were some reports that Chairman Warsh floated the idea of scaling back the to 6 from 8, and the other 2 could be used for broader discussions. Is that true, and what do you make of that?
So I can't disclose anything that's discussed in an FOMC meeting. We will, of course, release our transcripts 5 years from now, and so there'll be some conversation there about what was said. I think that we have a cadence of meeting that has been signaled for some period of time. I think it's always good to reevaluate. Is it the right meeting cadence? Should it be more frequent?
Intel looking for more upside.
Conversations. I know the chairman is focused on making sure that we're bringing in.
We've got Rocket Lab's earnings tonight.
To give us some outside perspectives. So he's engaged with some extremely well-respected experts, both from the academic and the business sectors, who can help give us insights about a number of different areas. And ultimately, they'll bring those observations to the FOMC, and the FOMC will make decisions whether we want to adopt them.
On those task forces, one of the areas that he's looking to explore is the Fed's inflation framework. And some on Wall Street have said that could be a way to redefine inflation. And I'm curious, do you think the Fed needs a new inflation framework, or do you think that core PCE should remain the Fed's preferred measure of inflation?
I welcome the discussion, and I welcome doing deep analysis on it. I did have a recent speech where I sort of broke down why the Fed had settled on 2% PCE inflation as our objective. And I think if you go back and look at the history of it,
Datadog back up,
brings in a lot
moving back up to the highs. New push to the upside. Datadog, very nice.
Something above zero if you're in a 0% inflation environment. that can be a very difficult environment. It usually means
Pretty obvious institutions were buyers today. Almost at Friday's high volume.
So the insights that we'll get from the task force that will help us think about what we should be using as that guide, if that's one of the things that they're looking at. We in Cleveland have the Center for Inflation Research, and so our team spends a lot of time thinking about all the various metrics for inflation, and thinking about, what are the different things that we're learning from each of those different indicators. Because again, we have one objective that we're held accountable to, but there's a myriad of other indicators that I look at to help me get a sense of where we have intermediate and longer term.
President Trump said that he is now considering, or there's a letter that the White House has sent to Federal Reserve Governor Lisa Cook, telling her that he's considering her again this coming, of course, after the Supreme Court ruled that the president needs to offer a certain amount of time for her to respond to allegations. What's your reaction to that?
I think the Supreme Court went through and was very thoughtful in their decision making. They said that it's really important to maintain the independence of the Federal Reserve. I firmly
Okay, Rocket Labs
policymakers, monetary policymakers.
giving it a little bounce. All right, I'm going to take the opportunity to buy a couple of puts here.
To make sure that we can
Looking for upside on Rocket Labs.
For both maximum stability,
75s.
maximum employment and price stability. And it's important that we're, accountable. So we are delivering on.
I don't think it's going to get down there.
And we're accountable to Congress. And so I try to meet with elected officials when I'm down in Washington, and you saw the chair was testifying in front of both the House and the Senate earlier this year. So the transparency, the accountability, the independence, all of those are really wrapped together.
But thank you so much for your insight. So appreciate it.
Thanks for having me, Jennifer. That was great.
JB has been resumed in less than a minute.
These remarks from Fed official Beth Hammond, very own Jennifer Sean, Jen, great interview. What immediately struck me, Jen, Beth Hammond doesn't want to just raise rates. She's telling you more than one hike could be necessary. How significant is that?
I think pretty significant, Josh, because if you look at the whole committee and when you looked at the dot plot at the June meeting, we saw it was pretty much split
ATH.
between half that wanted to hold and half that wanted to hike. And of those who wanted to hike, maybe we saw one hike. The fact that she thinks that we could see more than one hike shows that she's at the very hawkish end of this.
Okay, so they're looking for 13, let's say 15%. So basically $12.
She wouldn't cap it at this point. She wouldn't.
JB has been resin 10 seconds.
Because we just had a weaker reading on the job market. We had a cooler CPI report. We're going to get another CPI report on Wednesday, which is expected to show further cooling. And I wonder, how can you make a case for a hike if it looks like you have two back-to-back months of cooling inflation with a weaker reading on payroll?
See, this is what's interesting. I've had smart people at this very desk, and we were talking about this in the newsroom, who kind of made the argument that, here's their point. In your opinion,
S&P, not much time left. We got 42 minutes.
their argument is, and to your point, now I'm gonna throw
I bought some calls earlier. That's those are toast unless we get some kind of movement here. S&P 500. Need to get through VWAP.
So she's very much in the camp of get two back-to-back cooler readings on inflation. Does that change things for you? And she says, listen, I hope I'm wrong, but that's not what I'm saying. That's not what I'm hearing from folks on the upside. As far as to say is that, look, businesses are making investments now, and based on where interest rates are right now, that doesn't show that interest rates are restricting investments. It's restricting the economy.
when she said there, inflation is becoming more broad. What evidence is she seeing? Like, what moves?
That's exactly what I was just thinking. The fact that a lot of businesses are still deploying capital, they're still investing. The level of interest rates net right now, which is 3.5 to 3.75, doesn't appear to be restricting the economy in this way. She also looks at financial players, although and we the fact that yields have backed up, and to some folks who are in the markets right now, they wonder if there's a credibility issue with the Fed. And Hammock went as far to say that, look, I take into account what financial markets are doing, but it's really on us from the central bank.
So what change? I think my last question. What changes?
Apple trying to push a bit higher.
We'll get back to 2%.
It seemed like maybe 2 reports in a row. Inflation not enough. I wonder about 3 in a row.
But for her, I think it's really the people she's talking to on the ground and her district and what she's hearing. She's hearing a lot of pushback on prices are just too high.
NVIDIA starting to turn the corner. Might be worth a shot down here at NVIDIA. Datadog. Intel Doji didn't do much today. Secondary offering of $15 billion. Weighing on the stock, diluting by about 3%. Intel.
Is first major's golden hour drop. Perfect value add marketing. I don't always know about it. It's like I'm into really greasy or really heavy. This is not that. It is light. It tries down really quickly, which I'm personally select all our major products. The golden hour dry oil smells incredible. It really transports me to this zen experience.
Okay, we've got about 40 minutes to go.
It's the appropriate niche because they are really a consumer-focused company. But OpenAI is kind of
Meta just been sitting here all day, haven't given us much follow through. Datadog and the security stocks, those were the good ones today. Early on, we noticed that those were on the move. Datadog, Palo Alto, CrowdStrike, Zscaler.
6 months ago when they were sort of left for dead.
Datadog's at the high of the day.
Doug, I appreciate the time as always. Leave it there. That's Doug Clinton.
It's up 24 bucks.
Christina Partsinevelos for a look at the biggest names moving into the close today. Hi there.
Tall shares because they're just a little bit lower after the two-day announced today. $15 billion stock off the underwriter sticker option. It comes as a little bit to fund the costly build out of its chip contracting business. Great time to do it. You can see shares go down about 3% today because of fears of dilution. Meantime, HPE enterprise shares are higher on an upgrade to overweight from equal weight to at Morgan Stanley. Analysts bullish on the company's networking business following HPE's acquisition of Juniper, and they see improving free cash flow as well as expansion potential. So that's why you're seeing shares really jump about 5%. Last but not least, CrowdStrike and Palo Alto trading at record highs amid just renewed demand for its AI security tools following that Black Hat cybersecurity conference. Businesses have been turning to cybersecurity companies to secure systems through the ATH that we keep talking about. So that's why shares are roughly about 5% higher, Scott.
Good stuff, Christina. Thanks, Christina Partsinevelos. We're just getting started. Coming up next, from breakthrough drugs to big ticket deals, we are breaking down the action in biopharma. STEM Point's Michelle Ross is back at Post 9. The names she is betting on the most right now.
LRHC. DETX.
You may rise in 10 seconds.
THH. ERTW. THH. ERTW. THH.
and walled it down.
THH. THH. THH.
All right, welcome back. It's been a big year for biopharma M&A, one of the strongest in several years, in fact, and that's creating opportunities for investors in that space. Michelle Ross runs STEM Point Capital, joins us back at Post 9. It's nice to see you again.
So great to see you.
So you pointed that out to us. Well, why is that the case this year?
It's an interesting time. We are going into a very big period of patent expiration. A lot of this revenue that we have been enjoying as a top line revenue growth driver is going to go generic. And we estimate, based on our models, over the next decade, it's about $400 billion of revenue that's going to become genericized. When that happens, you typically take 80 to 90% price cuts. So there really does have to be a replacement cycle of sorts that goes on. And we also scour pipelines of pharmaceutical companies and have recognized that what they have internally is not going to be sufficient, in our opinion, to make up for that hole that's going to be created.
The regulatory environment has helped as well.
Yes.
Right? In what sense?
So it has been a very unique couple of years in biotech. In the span of a year, we've had multiple heads of the FDA and different divisions. It posed one of the greatest tail risks for some time when we had certain members who were just not going by, I think, what many of people in our group would assume would be a natural answer to certain questions that we'd seen historically or precedent-setting cases. We had a change over the last couple of months, and in seeing that new kind of guard at the FDA and waiting for that new head to be announced, I think we're all looking at the tail risk of being slightly different than it was even a year ago.
So we've been, as you were answering the question, we were cycling through some of the names, and the ones I looked up at and noticed right off the bat. The ticker symbol is ERAS, Raska, and the other one is Tango.
Yes.
They jump out because the stock moves year to date are unbelievable. They remain two of your favorites.
They do. We really are looking at a class in oncology, and we are seeing something novel happening in that group that I believe we haven't seen.
Tesla's starting to turn up. Tesla turning back up a little bit. Apple and a nice little pop. 750.
Agent is going to be something that really, we think, sets this apart from other agents in oncology right now.
You can really sort of see the optimism. Let's look at the charts again. They look similar, some of these do, in the sense of they're like sort of giant stair steps.
Yes.
And they keep taking that next step up around trial events.
Yes.
Oracle, trying to break a bit higher. Oracle. Kind of a slow day, but some of these stocks have moved back up. Oracle's trying to get back to the 50-day.
Oh, that's right. But that was a huge event.
It was a huge event. It was unprecedented.
Apple.
With the likes of those results ever. It's just going to change the way a pancreatic patient.
Somebody took a little profits right there.
And that drug in particular led to a kind of rising tide of sorts for that class. In effect, we also see Araska moving in tandem because of the opportunity that this presents. And then around the edges, there's going to be this addition, in our opinion, of other combination agents that can almost supercharge what we believe is going to be a very large class.
some of that pricing. TrumpRx itself is in fact not a pharmacy fulfillment platform. So they then partner with companies such as GoodRx, who we then, when that consumer goes to avail themselves of that price, utilizes that coupon on our platform and or in partnership with pretty much every pharmacy we work with. From a volume perspective, and at this point, both brands and generics have launched. Generics launched earlier in May, and we also partner with the administration on generics. Thus far, it's really been a tailwind. We've found that it's been largely incremental to anything we would have previously forecasted, and that most of the users, albeit overwhelmingly leaning towards GLP-1 users, to be fair, most of those are users who previously had not utilized GoodRx. So we're not seeing any cannibalization from other channels at this point, and it appears to be additive.
Follow-up question, Wendy. I'm curious to get your thoughts on Amazon Pharmacy. And just how you think about that, Wendy, like, is it, is that an opportunity? Is it a competitive threat? Is it both?
Sure. Well, let me start first by saying Amazon is in fact a pharmacy, as you know. So GoodRx we're not a pharmacy. We work with most pharmacies in the US. Amazon, in fact, is one of them, as are a number of other home delivery pharmacies. So think a mix of really any retail pharmacy you could walk into in the US, in addition to home delivery pharmacies. Most certainly, Amazon also has cash drug pricing, to be sure. So in that instance, there is some overlap in what we provide to consumers. But again, if you step back and really think about wanting to look for competitive pricing for brands and generics, in addition to, as a consumer, wanting a choice as to whether or not you can potentially utilize the pharmacy around the corner, one you've been using perhaps your entire adult life, one that's closer to your residence versus work. Many of us are polypharmacy users, depending upon whether we're traveling or whether we're picking up a prescription at work. The GoodRx platform is really agnostic to pharmacy. So in that instance, we're pretty dissimilar from Amazon, but be that as it may, we're really agnostic to pharmacy. And I look at our overall mission of making drugs more accessible and affordable for Americans as part of the broader need, which is it should always sit alongside insurance. And by that, I mean cash pricing for you and I, regardless of which platform you're availing yourself of, you should always know what the cash price is and whether or not that price is less expensive than your insured price. And that is something we've continued to lean into. That's something we'll continue to lean into down the road. So much so that I'm spending a good bit of time in DC to advance that policy support as well.
Wendy, so good to have you on the show today. Appreciate your time. Thank you.
My pleasure. Thanks, Josh. It's nice to meet you.
Come up and check in on the tech trade.
All right, I got about 25 minutes to go. 26 minutes to go. I'm your host, Cousin Benny, coming to you from closingprint.com. It's been a very slow day. Pretty choppy after about noon. We had a nice run up in the morning. Some of these stocks are seeing a little bit of short covering into the last few minutes of the trading day. Most are off the highs of the session. Not much to do today except monitor open positions. We do have Rocket Labs with earnings tonight.
ATH.
May rest in 10 seconds. SCKT may resume in less than a minute.
Meta looks to a brighter vision for widespread access to super intelligent AI. Apple's future is looking a little dim, at least for one analyst on Wall Street. To help us break down all the headlines, we're calling for tech support. We gotta find some Dan Howley. All right, Dan, let's start with Meta. Because Zuckerberg pens a new essay, Dan, his vision for AI, right? And he talks about open weight AI models. Let me start there, Dan. Explain what that means in simple terms and why Zuck thinks of that as a competitive advantage.
Yeah, so open weight AI models are basically AI models where you can kind of download them and then adjust the things that allow the AI to make decisions. Now, you're not changing how it was trained or anything. You're just changing the weights, as they're called. So you can more or less customize these AI models to your needs. And so Zuckerberg, in this kind of manifesto, discusses how the world needs to use to be more open when it comes to AI and put it in the hands of more people rather than a select few. So he kind of derides his rivals like Anthropic and OpenAI, kind of saying, why should they have all this concentrated power in their hands, as well as governments and other institutions? It should be up for everyone. So that's his way of kind of pushing this idea of personal superintelligence, which they've been talking about for quite some time now. Now, open weight models are great. There's been a lot of discussion about them. The idea is that if you have an open model, you're able to have millions of people around the world kind of dive in and look at it, and that allows it to be more secure, and it can also lower cost. So more people will be able to get access to it. Now, in the manifesto, he also discussed how they would be providing people with access to AI, they being Meta, either through free services or for folks who want to pay more to get more access to compute through a gradual paid service, excuse me. And so that's kind of where they're leaning in this overall statement. But it does seem as though, Zuckerberg is trying to come out as one of the main thought leaders in AI. He says that it doesn't make sense that all these companies are saying how dangerous this technology will be, but at the same time also pushing the frontier of the technology. He says, this is something that could lead to more prosperity for all, and that generally the idea is that this will help with invention rather than automation, which is also an interesting kind of take of this.
Zuckerberg also talks about this new $1 billion fund, Dan, communities near Meta data centers. What do you think of that?
That's, I think, a way for kind of the company to.
Okay, Intel trying to push back. It's pushing back above the opening range high now. Intel, end of day, looks like it might run up. Watch Intel. Secondary offering mentioned this morning. Stock pulled back in response. Okay, that looks okay. Datadog from earlier this morning. That's up $24 now.
Louisiana and how the local school teachers.
Almost 25. It's near the high of the day. So it'll be closing near the high of the day, back above the 50-day, the blue line. So this is an indicative of institutional buying. All day long, it's just been nonstop back up to the highs.
I think on these areas, and more as though they're trying to, ingratiate themselves towards people here. Now, whether that actually pays off and people say, okay, well, that's a decent trade-off, or they continue to push back against data centers, that kind of has to be seen.
Let's switch gears, Dan. I want your thoughts on Apple as well.
Okay, S&P starting to bounce a bit. S&P, just some shorts covering at this point. We've tried to get above VWAP twice in the evening session with no luck. All right, Netflix turning back up. Rocket Lab's watching. There goes SpaceX on the move. SpaceX on the move.
This kind of 20th anniversary iPhone, which is what it would have been, if it is actually canceled, is just kind of a no-go. And so his thinking in this note is that it's a lot harder to kind of develop these new form factors that could allow Apple to raise average selling prices and increase revenue than perhaps was previously imagined. They are going to be coming out with, or are reportedly coming out with, so it seems all but certain at this point, their foldable phone in September. That's obviously the biggest change to the iPhone ever. The foldable form factor, and this would have been another kind of major
Circle, watching for circle
design, and then that would have also been used
to turn the corner. Circle looks like it might be turning the corner.
If this has actually been canceled, then yeah, I mean, it does raise some questions. Now, Apple is still selling iPhones.
Post earnings.
Services obviously doing well. And we have John Ternus preparing to come in on September 1st as the CEO. So now we just have to see kind of what his plans are for the company.
Speaking of plans, Dan, do you think Apple's raising prices for those new iPhones? We expect to see next month.
Yeah, I think we're going to see higher prices on those iPhones. I mean, we've seen higher prices on certain phones from the likes of Samsung. We've seen higher prices on iPads and Mac. And so it only makes sense with this kind of, memory shortage, the storage shortage, for them to have to raise prices just because, look, those components are more expensive. They're trying to protect margins. And so, yeah, I do think that these will be more expensive. I think the foldable gives them an opportunity to kind of just set a baseline price. And if you look at what Samsung charges for their foldable phones, it'll probably be, around the $2,000 range for something like
All right,
that.
took a little bit more of Datadog off.
More because, Apple does market itself as a premium company.
Oracle back to the highs. Oracle.
Could see as much as $100 price increase. I think they'll spread across, the lifetime of phones. People, tend to pay them on a monthly basis. It may not be enough to drive people away, just because you're seeing maybe a $10 increase per month. It may not be enough to get
Apple. Oracle.
Thank you, buddy. Appreciate it.
Okay, look for Oracle to follow through tomorrow. Oracle.
Nancy Taylor, CEO. Nancy, it is always good to see a big picture. Hyperscalers are just they clearly show us the AI can drive traffic. Google traffic. You suggest that returns are broad, mention Chevron, Gold, Visa. Just sort of explain what you're seeing. Explain that trend.
Well, what we're seeing, Josh, and thanks for having me in person on set with cowboy boots. What we're seeing is that they're utilizing AI in expanding margins and growing business and keeping headcount flat, not necessarily cutting headcount. So margins are starting to expand across sectors, and those are just a couple of names that we called out that really had dramatic. I think what Chevron said was they're spending 25% less on CapEx to generate the same level. So, it's hard to argue with that. This is the productivity boom we've been talking about. I know the numbers, people are pushing back on the numbers. Productivity hasn't increased as fast as some would like, as high levels as they expect. But remember, these numbers that we get reported are fraud. So the job numbers get revised, and remember we had that 2 million in overstatement in jobs, they didn't go back and revise the productivity. So I do think that there's a lot to be happy about as an investor, and just to use this opportunity to stretch out.
One way to think about, the first wave was sort of this hyperscalers, yes, NVIDIA.
Yeah.
So should I now think of it as like, okay, here comes the second wave? That's what I think it's like.
I think you want to focus on the infrastructure. Goldman just came out with a report that said compute, data center, and power spending is going to be $7.5 trillion over the next 5 years. So I want to own Eaton. I want to own Quantum Services. I want to own GE Vernova. And I think there's other names down the line, like you could add a position in Emerson. It's not going to be super sexy, but you'll get a decent return out of it. I think that's where you want to focus, because the build out is not stopping. It's accelerating.
You want to own Palantir?
Yeah, we own it.
Oracle. All right, that's okay. Palantir just kind of stopped just off the highs of the session. Security stocks, Datadog, CrowdStrike, Palo Alto, Zscaler, those are all looking okay.
it's not a valuation play, it's a narrative play.
Energy is up today.
It's very expensive.
Okay.
Said, we're the only company that is showing, that is adding effort, realizing economic value from tokens. And now he's building a front end engine because he's really hyped up about the large language model stealing his data. So I think that's going to be doing the
When they report on that, Gil Loria show, DAD,
Yes,
I think those are really smart.
yes.
The numbers are, yeah, it was 92% high. I think it was commercial, 50%.
Data Dog. Having a good day, Data Dog.
He's a bull. He told me it seems like it might be the best company that's publicly traded. What do you think of that?
Probably get another follow through day tomorrow, I would think. Data Dog.
Others in there, but of the software names, this CEO knows how and when to pivot, and he's a fighter. And that's what you want as an investor. You want somebody, you know, he would not want to be compared to Elon Musk, I'm sure, but Elon Musk is that guy where you go, I don't know how he's going to do it, but he's going to succeed. And that's definitely true for him.
SpaceX having a good day. On the move, SpaceX.
Consolidation, data for defense. I think that's going to be continue to be a growth market.
Let me ask you about this one. I don't know if you saw it. Story, but NVIDIA, they say, is working with Apollo.
All right, nice rally. SpaceX.
$1 billion financing package for AI infrastructure. I mean, you see him like, what's that tell you as an investor? Are we entering a whole new phase of the build out? What do you make it?
This one kind of made me a little bit nervous. They are extended, and sure, they have huge amounts of free cash flow, pristine balance sheet. But I think taking a breath would be okay at this point. Now that said, look at what Google is paying SpaceX: $920 million a month to rent 110,000 access to 110,000 GPUs. So, I mean, the data center, and it's to build the. I'm sorry, I'm wondering. The NVIDIA joint venture is really up to focus on AI infrastructure, which we do think you want to be exposed to.
You mentioned Google. Do you want it?
We do own it. We added it to our value portfolio. So we owned it in growth in our 12 best. We added it to our value portfolio 2 years when it was left for dead after Bard. And, you know, we're up to 110%. So
I just asked you some smart tech investors. They've gotten a little, they say about the number of just sort of high profile, very smart experienced Googlers who've been leaving, and they bring up like brain drain.
Yeah.
Do you share that worry or no?
Yeah, and we have trimmed some back. I mean, I think you want to be, as an investor, you know this, you want to be buying when things are out of favor. So the two new value names that we added were NVIDIA and our value portfolio. They were trading like value stocks right before earnings. And we just got lucky. We trimmed our Apple and we added to those names. So I think you have to be nimble, but you also have to have patience. That's the real trick in this market.
Sorry, that's not one this name, Intel, but I wanted to take that look at this. $15 billion stock offering, so it's not tapping the debt markets here like others.
SpaceX looks good.
The stock was down. Does that make sense to you that it was down?
Yeah, because it's diluting the shares, but also they can't borrow any more money because their balance sheet is burdened with debt. So I was actually surprised, Josh, it wasn't more. I mean, what do you do with $15 billion in this environment? Hyperscalers are spending that in 3 weeks. So I thought they'd raise more money. I don't think, I mean, it's up 160% this year. So I wished I owned it, but it's been a dog. That doesn't make up for the previous 8 years. So I think if you got into it, you're happy.
What about, I mean, Intel has benefited because listen, CPUs are you're playing with the growth of our new world of AI agents, same goes for AMD.
S&P just stuck here, not doing anything.
The server CPU market is going to grow more than 50% annually to $220 billion in 2030. And I'm sure some investors hear something like that and they just think, I'm just going to stay on CPUs.
Yeah, and you start to gloss over too, by the way, because the numbers are so big. But yeah, and remember there was a time in CPUs where AMD had 10% of the market share, and the rest was Intel's. I think it will be a great case study for business schools. What did Intel let go? But and also remember that the government was in there, handing them money and really orchestrating deals behind the scenes, so that they would have customers, and that President Trump would say, "I just made the shareholders."
Friends are back places, Nancy. I'll end here. We're talking about, I'm thoughts on the broader market too. See, we continue to just grind higher here. Here's a stat in Europe. The S&P 500 is now headed for a 7th consecutive quarter.
QECG holds it down.
I mean, is that just the whole story to you?
Yeah, well, and that if you look at, we haven't really seen multiple expansion like we did at the end of the nineties, from 95 to 2000, I think.
Netflix trying to finish off the day at the highs. Looks pretty good. Amazon, Google, looking a little better. Shorts covering. SpaceX having a good one.
Some multiple expansion, but I also think the Fed's on the sidelines. I'm probably one of a few people that believe that. But I think Warsh really understands productivity-driven growth, like we had in the '90s, and it's disinflationary in his view and in mine as well. And so I don't think you're going to see the Fed hiking. So there's a lot of tailwinds.
And by the way, just final question to bring it back to the AI conversation around. If I believe in that trend, do I as an investor make the assumption too that margins can keep just heading up and to the right?
I do think so. I mean, I don't know forever, no, but yeah, I think as
Intel dropped back off again. There goes Oracle. Oracle trying to push a bit more.
But the
Oracle finally woke up a little bit.
Is negative free cash flow. But these are companies with
Okay, needs to get back above the 50 and the 200-day in the short term. Oracle.
in the 90s.
Got about 9 minutes to go. 8 minutes, 30 seconds to go.
A difference that people are not really spending a lot of time talking about.
Yes, you always good to see you, especially on set. Thank you.
Thank you. Good to see you.
Coming up, what China's latest economic data could mean for the country's AI efforts. That's next on Market.
Ryan Miller fixes his hair. Don't know why he picks such a shirt, but knows he can do more with his money. Ryan opens his Fidelity app, sees his opportunity, and takes it. Ryan sets his investments to it was easier than I thought.
It's a good shirt. It's like flowers, but also on cows.
Sure, that helps. I'll start investing with no accountants. Talk about easier investing.
Data Dog looks like it wants to just keep going here. Very nice.
Aquí en los Estados Unidos, todos celebramos. Y aquí los hispanos manejamos más camionetas y SUVs por toneladas que cualquier. Preparados, listos, verano. Con el verano de ofertas Honda, haz que cada milla sea especial en una Ford o Accord Hybrid. Con motor
S&P pulling back. All right, Netflix trying to go as well. Netflix moving back above the 50-day moving average. Netflix looks like we might get something going on Netflix over the next few weeks, next few months. Change in direction, breaking the downtrend back above the 50-day.
Just ways to combine the geniuses in the so what happens if we bring these two together? Sipping on gin juice.
SpaceX came back to the 10 EMA on the 60-minute and bouncing.
The extra cocktail shaker. Stale gin. Stick the cookie. Ready? Please.
And China signals continued sluggish demand in the world's second largest economy. It's Jake Conley. And we're very ready to start, Jake. So in America, talk about this. We've been another Fed's target for years. In inflation, a different conference starting to explain that to us.
So they've the exact opposite. For the last 5 years, Fed in the US has been looking at inflation that is high and far above. In China, prices just aren't rising fast enough. The opposite problem, dealing with deflationary pressure, the prices are staying low. These businesses can't make enough money, which means they can't spend, which means that households and the whole economy is really struggling to get kind of its feet under it and really get going forward. That's really the problem we're seeing. Now, they're not in outright inflation. We got PPI and CPI data from China this morning from National Bureau of Statistics. Both of those showed upticks, but year over year, but they were slower than economists were looking for, below expectations. In some cases, on a more specific basis, slower than the previous months. So you see the weakness that's continuing even as Beijing tries to find any way to stimulate that. Hey, how does this happen? Why? The biggest problem China faces is the excess.
All right, got 4 minutes, 30 seconds to go. Not much going on at the moment.
China is the world's
Netflix breaking higher. Netflix
extraordinarily fast pace, but they
Netflix going. Okay, that looks pretty good.
Now you see that
Google popping now.
building on its housing market, and now because people can't make money, they're not buying houses, and it's really depressing the China property market. It's the same problem throughout that economy. They can build and build and build, but the demand from households who aren't making it isn't there. There's no one to buy those products.
And Beijing is saying if they're going to spend more on infrastructure, it's going to crack down on price war competition. How much of an impact government actually make?
It depends on what they go after. The second problem there you highlighted is price war competition. It's what China calls involution. Essentially, people making the same product will bring their prices lower and lower and lower to try to get market share, but it means prices just stay depressed. So China's been trying to crack down on that while not stifling too much of the free market. On the spending side, they've been trying to boost money in fiscal infrastructure projects, try to stimulate growth. There's a great example a few weeks ago. The Chinese
There goes Google. Netflix is running. Netflix through the 50-day finally. ABCD pattern.
Securities firms started buying really heavily. Just to
Okay, we got a nice C pivot here.
downtrodden too long.
Nice follow through. We're above the 50-day. Netflix back above the 50-day. That's a good sign.
Let's bring it all back here. So what is this?
Okay, Netflix, thank you very much.
Companies and for investors.
So it's two points. The first thing you have to think about is
3 minutes to go. 3 minutes to go.
if China is overbuilding all of its capacity, one way to solve that is through exports. It's one of the reasons China exports products, and for manufacturers here in the US, it means competition against manufacturers in China who are offering things at cheaper prices. We have seen this story time and time again, whether it's in chips and semiconductors and AI, it's clothing, other retail goods, other smaller machine equipment. You see them also trying to compete on the AI front. You see the labs like Moonshot, like DeepSeek offering cheaper and cheaper models. Again, part of the demand they're facing.
Netflix looking good.
Compete with the US. The US's advantage has always been
Netflix.
but that game's not going anywhere in competition, especially as China's economy does start to get stronger and does really start to compete in tech. The Politburo, the leading body of the CCP, has really been putting off.
Okay, Netflix looking really good. Minute and 50 to go. Minute and 50. Netflix on the move. Looks good. Apple. Apple's good. Apple.
Invest. He wants to invest.
That voice stays in the car, right?
One voice. Talk about easier investing.
Platform turns out it works, and results came back.
Apple, nice pop. Nice volume in today. Apple. All right, folks, have a great evening. Take care. I'm your host, Cousin Betting, coming to you from theclosingprint.com. At the closing bell, Apple is a nice pop. Looking for Rocket Labs to beat. Have a good one. Take care. We'll see you tomorrow. Hopefully tomorrow is a little bit better. Not such a choppy, doji day. Have a good one. Take care. We'll see you tomorrow. Ciao.